Morning. It's 8 o'clock Central Standard Time. I'm assuming that everybody's well here. And welcome to my virtual trading journal. The idea here is that everything I see on my screens is captured in the video, and my voiceover gives some indication as to what I'm thinking at the time. This is, there is no financial or trade advice implied or expressed here. There's a disclaimer in the description of this stream. The stream's not monetized in any way. I'm only in it for the subs and likes would be great, and really comments in the chat would be nice for some interaction and dialogue. But primarily it is, again, my virtual trading journal. And so that's the purpose of it. I believe that journaling is important, but I don't multitask well, and I found that, doing screen snaps and typing and trying to keep up with that kind of thing during the trading day was just distracting from my focus on trading. So this seemed like a really good alternative, and I'm going with it. All of the times that you see here are Central Standard Time. My windows are pretty self-explanatory, but let's run through them. This is the Bookmap, which is the primary execution platform I use now. And this is my IRT, which is the charting platform. So first out of the box are the numbers and reports. And they are as follows. Well, first, it's earnings season, so maybe it's easier to see that. Here are the basic numbers today. We've got housing sales that all of them are out at 9 o'clock, existing home sales, and the crude inventories at 9:30. And then the bond auctions at 12. But the biggie here is the earnings. We've got the Googles, Tesla. Hold on, I'm going to sneeze. Wow, that was something else. The Google, I'm going to do it some more, it looks like. Wow, excuse me. Yeah, Google's, Tesla, AT&T. Now, the way this is, first of all, this is investing.com. You have reports, calendars, etc., and it's free. The little moon over here indicates that they have release the numbers and have the call after the close. And the little star is that was before. That's why you see the numbers are already updated here. This is Financial Juice, which is also completely free, and you can see all the magic show and misdirection that's going on here. And this is their synopsis of what's important for the day. The existing home sales, the crude, 20-year bond auction, the calls that are coming up, and then in the case of yeah, there it is. I was going to say, now and then, as speakers develop and become scheduled, then they put them in, like the White House press secretary here, etc. So that's the numbers that we have to watch out for. 9 o'clock is the big one that you should pay attention to unless you're trading crude, and then 9:30. And of course, we have the ever-present risk, unscheduled risk due to techs and whatever else that might happen. So that's where we are there. Now, for the pre-market, this is yesterday's RTH session. And here we are in the overnight section. So we're way up here, way above yesterday's range and close. But notice that we've just gotten into the ETH high, almost to the tick. Let's see if that's correct. Yeah, look at there. Almost to the tick of the previous, well, that would be, I guess, Monday's RTH session. So there we have that. The way this works, this is the ES Mini, the NQ Mini, the ES Mini Micro Composite chart, which is simply a daily RTH session chart, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them. In so doing, it generates a micro composite VPOC and the high and low volume nodes here, these red and green lines, which are pushed automatically to bookmap. Oh, excuse me. I'm telling you, the sneezing and whatever else is out of control there. Now, this might be a little easier to view like that. These red and green lines are the high and low volume nodes, and they just represent the high or the low volume areas within the market, within the volume profile of this micro composite chart. This black volume profile you see over here is the granddaddy of them all, as far as my charting goes, and it goes back. It's for the ES, and it goes back to September, whatever that says, 16th of 2021. So we're at all-time highs for whatever reason. And this is the market profile chart of the ES. I also track the micros, same exact setup. And I do both for reasons that I'll talk about later, I guess, or I think. And both the red and green volume nodes and the session prices for the micros and the minis are pushed automatically to bookmap by me. So here is the all-time high. We've just now put in another all-time high in the overnight, which means in my world that there's no way in the world that they're going to allow that to stand. The RTH people don't like that. So there we have it. But let's go through these column at a time. Here's the micro composite column where I manually enter these various levels, POCs, all-time high, blah, blah, blah. These are the high and low volume nodes, which are pushed automatically that I mentioned. This is the full session volume profile, which started plotting last night at 1700 and which continues through 1600 today. This is not the ETH. This is the Globex or the full session. This is the RTH session volume profile from yesterday, which will reset this morning at 08:30 Central Standard Time once again. This is my notes column, which is real important to me and probably the most interactive through the day. The first thing I do here is set the column title to the open type, which is expected for the day. So we're going to be opening higher out of range today, and I'll explain how that's determined right now, and it's real simple. The open, the open type, there are only four: higher out of range, higher in range, lower in range, lower out of range. Think about that for a minute. Higher out of range is what? That's a gap up, and how it's only determined by two criteria. If we were to open the RTH session right here, right now, it would be right here at 63.70 quarter. Where would that open compared to the previous RTH session close and the previous RTH session range? Well, if I can show you here, maybe. There's the close, I suppose. Yes. So we are much higher than the previous RTH close, up here to down here. And here's the previous RTH session high. So we are above that. We are higher, out of range. Real simple. None of this stuff is, as much as many influencers and guru internet people would like to make you think this is all hard and complicated, it is not. Yes, if you want to get into options, Greeks and stuff like that, you're going to have to think on a different level in terms of math. But as far as what we're doing here in the futures, it is not the case. It sounds good if you're trying to sell somebody some, big bag of BS, but that's not what I'm up to here. This is my journal, so I'm only trying to explain and share everything. This is the session prices, which this column is the session prices, which are pushed from IRT to Bookmap. Real simple. And there's no magic numbers or lines or session levels here either. First of all, there's no indicator on my Bookmap or my IRT. There are POC for both full session and RTH session. Scroll down here, there's the RTH. It's a more bright yellow for the RTH and a little more muted or darker yellow for the full session. There is a VWAP for the Globex and one for the RTH. There is a mid for the RTH only. And there's a IB high and low for each. And the rest of these prices are just what they tell you, right? Now, something else that's kind of, that can be kind of confusing and should be explained. The POCs, nothing more than the price at which the most contracts have traded so far in the session. That's all. Right now, 4,206 I'm blowing up here, sorry. 4,206 contracts have traded so far in the overnight session. The absolute split second that any one of these other prices here, higher or lower, says 42.07, this yellow line is going to move there. That's it. It's just a marker of the price at which the most contracts have traded. Same goes for the RTH. Now, at the close between the yesterday's RTH close and the open of the ETH, I put this naked volume point of control here, marking this RTH VPOC. This is where we closed yesterday. So by definition, this is the naked volume point of control of the most recent RTH auction. That's it. Simple. The IB, that's also a line that gives some people trouble, or a level. It's an old acronym from the market profile days called initial balance. What this IB high and IB low really represent, the high and the low of the first 1 hour of the RTH session. That's it. Once we open, this will jump to the high, the low will jump to the low, and they will continue to go up or down depending on what price does, and for 1 hour. At 9:30 Central Standard Time, this will quit moving. That's all there is to it. The mid is the mid. What is this? This is the EM mid. This is the overnight mid. Previous RTH high. The overnight volume point of control. Overnight high. Developing value area high as compared to value area high refers to developing. This is for the current auctioning session. Without the D, the previous auctioning session. I'm telling you, this is real simple. What you need to be focused on and what I need to focus on is where these levels are and what they mean. And not be worrying about how it was derived or how it was contrived, because they are not so. They're very straightforward and very easy. So let's get to, we've set our column title now, and this open type will dictate the statistics that will be associated with the various prices. And that's really important. The reason I changed the column title is that when I go back and look at the stream or a screen snap or something, or when I listen to it, I know immediately that gives me a lot of data. This tells me where we are in relationship to previous close and all of the data that I just described. All right. So now let's look at the statistics, which is also really simple. Remember, I told you there's only four open types: higher out of range, higher in range, lower in range, lower out of range, period. IRT highlights the column or the open type, which is correct for that day. This was yesterday. We've already determined that we're going to open higher out of range this morning, unless something dramatic happens in the next 15 minutes, which I'm not doubting. Which I am doubting. Can happen, but I'm still, but I don't think so. So higher out of range. Now, what the study does is looks back at 2,000 days, basically. Of these 2,000 days, we opened higher out of range 513 of them. Of these 513 days where we opened higher out of range, price revisited the overnight volume point of control 413 times, or 80.5%. Whoop. Would help if I had them aligned, yeah, but that's all. God damn. Sorry about that. Well, this isn't working out like I had it planned. There. I have a hard, God darn it, I'm having a hard time seeing these. Okay, you get up here. You go away. You come back down here. That's all there is to it. Now I will simply go down the list of the next ones. Overnight volume point of control, overnight high, 77.4. Overnight high, 77.4. See how easy this is? Straightforward. God, boy, my eyes are just not working today, are they? My eyes are not working today. That's been a problem lately, actually. There we go. Now, I will just continue to go down this list. Next one is the IB high. That's a good one, 65.7%. And I'll show you why that's a good one. IB high, 67.4. And now what I need to do here is put in IB high. Because, as we just discussed, the minute we open this high, this flag is going to move to the high of today's RTH range for the first 1 hour. So when I look at my statistics, I'm going to wonder what the hell was 67.4% about if I don't put that flag on it, if I don't put the initials there. The rest of them stay where they are, pretty much. So that's something to be aware of. Previous high is 64.9, so that is right here. And again, with the, I know one of the problems is this makes it a little simpler to get them lined up. And there's our previous close. That's got to be coming up pretty soon. IB low? No, it's not. Oh, the IB mid is 64.1. That's usually a pretty good one. All right. I will continue to do these a little bit later, but I want to move on to the next order of business here. IB low is 58.5. Where's the previous close? There we go. It's 46.8. So the close is 46.8%. I wanted to catch that one. Now, here's another thing that's kind of important to understand, or I think so anyway. The IB low is way down here, and here's the previous low, okay? The IB low is 58.5%. So I'm going to put that right there, 58.8.5. Now, the reason I'm doing this, if my fingers would just start working, is to illustrate a point. These are statistics and probabilities. Here's 46.8% the previous close. How the hell are we going to get down here to 58.5% unless we go past this and this and this and this and this, right? So you have to remember that these are probabilities, and they are only affected by two criteria, which we've just discussed: where we will open with relationship to the previous close and to the previous range. Nothing else. Nothing in the news, nothing. So, nothing to do with yesterday's drama or anything else. That's why we have these big discrepancies. And let me see one thing. I'm going to see the overnight low. That's 34.3%. Oh, this is even better yet. Okay, so here you go. Now that's a little bit more descriptive, I think. And you understand that it is only descriptive. This is only about probabilities and a percentage in this current circumstance. Next order of business here I'm a little bit late like usual, is the T-Lab snap, which I will do now. And you'll see why I do this, and because I don't multitask very well. The T-Lab is a Bookmap Discord chat room started by a guy named Tom B. and is completely free. You don't even have to be a subscriber to Bookmap in order to participate and take advantage of the resources. There is a description a link in the description here to get to the Bookmap Discord server, which you have to join, of course. And then after you do that, navigate to this one room right here, Traders Lab Tom B. Every day, I make 2 snaps in there, or contributions there, at least. One is around 6 in the morning is the numbers and the reports. And the other one is this snap that I do every day at about 8:20. And that is, hold on a second here. So that's the Traders Lab. Now, Tom B. is a professional trader, I believe. He says so, and I have no reason to doubt him. He's been trading about 46 years. He shares a philosophy that I do with risk management. And look at us pop here on, what are we doing here? On 8:23, somebody's talking about something. That's got to be a news blop, either Trump or one of his merry men. Anyway, all of the resources there are free, and one of the most important things to me, morning GA, sorry, is that you're never solicited for anything, including subscribing to Bookmap, which is pretty phenomenal if you give that a moment's thought, because it's their marketing tool, right? That's the whole point. But they understand the value of what Tom's doing, and you're never solicited for anything there. If somebody pings you or DMs you or something, if you go there and somebody does that, it's BS. It's got nothing to do with Tom or Bookmap. So there's that. There's a pretty good crew of people in there. And it's the general intention is that it is it's more adult, It's not like Romper Room, and people are genuinely trying to develop a business. So that's the Traders Lab, and that's the only recommendation for a website like that I make, even and including Bookmap Discord server sites, because I certainly haven't been to all the rooms, and there's only a couple others I visited briefly, And they were typical. The third word out of the guy's mouth was trying to sell you his indicators or his mentoring course or some BS like that, which is perfectly fine. And it's okay if Bookmap wants to support that, but it's not something I'm interested in. And I don't feel comfortable then recommending it to someone. All right. So I don't. So that's the story there. That's the T-Lab. Now let's get back over here and notice something. This big news blurb up here, which is obviously what that's about because there's nothing out this morning. Notice that this is pulling stuff around, right? We now have the mid right up here underneath of the developing value area low. So this has changed because the mid changed, right? What is the mid? It's the middle.
Okay.
So if the top goes up, the middle changed. There you go. That's where we are here. As we're now, the overnight high has changed. We got to do that. When the open happens, I will start to flag the migrating volume points of control here in this column also. And I think that pretty much wraps up those bits. Now let's do something that's pretty important. If you're going to be here doing this, you better want to trade, right? So in order to trade with Bookmap, you have to activate the trade control panel and choose which configuration you want to interact with the application to trade with your mouse. If you choose chart, the only place you can trade with the mouse is in this active data column right here. You see how it's a $sign there and an arrow over there? Okay. The dome, the only places you can trade are the dome columns, and both is, guess what? Yes, sirree, Bobby, both of them. Now, in addition, I use multi-brackets, and I use a risk-neutral trading system or trading philosophy or whatever you want to call it. And it has to be an even number of contracts. So this is the lowest size package for 2 contracts. The stop for the entire package is at 1 level. The first risk neutral scale is at the same amount of ticks as is the stop and for half of the package. So if it's a 12 tick stop, we have a 12 tick risk neutral T1 target, and it's for half of the package, in this case 1 contract, and then there's a runner. If you go with 4 contracts, for example, it's pretty easy, isn't it? 4 contracts, 12 ticks, 2 contracts, 12 ticks, and then 2 runners. How easy. You can determine, obviously, I'm sure you immediately figured out that the size of the package and the stops are completely dependent on your homework, your risk tolerance, your account size, etc. That's for you to figure out, not me. Nobody can do that except, for yourself, for you with those parameters. And in my case, I determined here, and it's kind of been a basic rule of thumb to start with, that the T-Lab and Tom and Rod and a few of us in Static is to start with a 12 tick or 3-point stop loss. And the minute you've chosen the package size and the stop loss, T1 is automatically dictated. It's for half of the package, and it's for the same number of ticks as the stop loss. And there you go for the rest of it. Next thing I do is this right here. There we go. Now that is a trade copier that I've just turned on. This is look at this damn thing go. I love to look at the news here and see who said what. This is a TopStep evaluation or combine account, the base account, and there are 4 others behind it. So when I make one trade here, you'll see a big line of entries plop up here, flags, and that means it's copying to all of those. My concept here was to start with a basic combine or evaluation account, whatever you want to call it, and record it completely transparently and with accountability through the entire process to live and withdrawals and all that kind of stuff. So that's why it is, right? That's why this exists right now. And of course, any way you practice and develop your trading skills is great. In the case of a combine, you have the potential, you have a very low fee to enter, and you have a potential of making money, which you don't have with a regular sim account. So there you go. Next thing I do here is after I've set up my risk neutral package, and there we open. Oh, and it's set on automatically. Well, blow me over. I fixed it. That's amazing. What I was going to say was the minute I've done that, I click this button again, gets my real estate back. I have all of the parameters up here in ticks, not dollars. And, well, I'm so pleased, and away we go. It doesn't look exactly right to me yet, because how can we have a trade up here and have nothing going on over here? Suspicious, eh? But we're open. Merry Christmas. Happy New Year. Here we go. And that's how I flag the migrating volume points of control. Oh, here we go. Yeah, that is way wrong. What the hell is going on here now? That's pretty weird, isn't it? What we're going to do here is give this a minute till I see the open. We didn't quite tag out, if I want to believe this, we didn't quite tag out the overnight volume point of control. What is going on? Do you see this thing jumping around? Is it just me, or, maybe I better back off the coffee? Yeah, here's our open. Absolutely. There's the open right there, and the volume profile is not getting up there, so it reset, but it hasn't done it correctly. God darn, that's frustrating. This worked perfectly for years, and then all of a sudden, it's pear-shaped. Welcome to the world of trading. It's just one of the magical mysteries of trading. So here's our IB low, which ought to be down here. Here's our IB high, which ought to be over here. Wow. What a complete cosmic pain in the ass, eh? Well, let's give it a minute to get its knickers out of the knot and see where the hell we are. Okay, one of the things I do here, which I'll show you how to do in IRT, is after the open, I changed my charting from full session to day session, like that. Pretty tough, huh? Pretty slick. And there's a couple of reasons I do that, and I will explain what that is here in a minute once I figure out why in the hell this thing isn't working exactly as I had hoped. I've already changed this one, so. All right, well, now, look at this noise right over here. Well, there's our open. Here's our IB high. That looks to me to be correct, actually. So what seems to be off to me is the volume profile calculation. And I use IRT as a gold standard. So here's the IB high, and we're at 63.20. OBS has fallen over, and who knows what's going on here. Okay. All right, so let's see about OBS. It looks like it's trickling along down the hill. That's pretty cool. Morning feed. Tech seems like it's working. Okay, yep. Now, what I'm going to do here, well, at least it did reset more than it has been. It's always worked perfectly. I have my reset configuration set to 8:30 in the morning. This is how it's been since I've had Bookmap. No problems. All of a sudden, it decided to start having a problem. What I'm going to do now is try this. I'm going to clear resets in hopes that it will recalculate and get its shit together, and it is apparently not. We have an IB low, which seems to be correct, and we have an IB high, which seems to be completely incorrect because we should have volume all the way up here. We do have, if you notice, on IRT, there's volume going clear up here. Oh, that's disappointing. That's real disappointing, actually. I'm going to have to ping my friends at Bookmap Support and ask them WTF here. Always something in there. The volume profile is pretty important to me because it's pointing out high volume node, low volume node, where we've gone. It affects the calculation of the POC. It seems to be accurate now here, but what we're missing is this data up here at the top for the IB high. Another thing I'm doing now, a new thing, new and improved, is I am putting a bar right here at the top for the start of each session. And then through the course of the day, I keep, and look how that's gotten off just by moving it. Okay. And then by the course of the day, or through the course of the day, I'm able to monitor or keep on my screen the entire day session. And when I want to trade or get around to I'm going to interact with the system. There we go. Now it's gotten its shit together. So now we're up here. Now it's gotten up here pretty close. So that'll work. When I want to interact with, or trade potentially, when I anticipate that one of my setups is going to happen, I can zoom in. And I found that to be, that was Rod that came up with that idea. And I found, attribute, kudos to him. Thanks a lot. This is a iceberg, and you'll see it trailing out here. IB low, IB high. I've already talked about how those are calculated. There you are. I think we're pretty much up to speed now. Whoops, wrong screen. Sorry about that. There's the line at the start of the session. You'll see there's one back here for the start of the wherever it went. There's one back here at the start of the overnight, and there's previous day, and on we go. Bookmap is crazy. You can get wound into Bookmap to where you're down within, these are 1 second intervals here. I don't know who would trade like that, but there you are. What I understand about Bookmap is that somewhere I picked this up somewhere. They started out as an algo trading company. And that's where they developed all this and why they get into such, minutiae in terms of time frame. And then somebody figured out that, well, hell, we can make a lot more money or as much money and not have any risk by renting this thing out to a bunch of trading dorks. So there they do. That's what they are up to. Okay. Hey, Antonio. Bon dia to Dwayne. We have craziness afoot. What's new? With the random risk boys in Washington. We've got news out at the top of the hour and at 9:30. Market movers. Oh, here we go. This guy thinks he is a New York mob guy. Really, I think that's the impression he has of himself. All we're doing is charging, protection, and it's the weirdest thing for anyway, I'll hold my comments. Existing home sales at 9 o'clock is going to be a market mover. And then we have the EIA crude inventories at 9:30. Typically, it doesn't affect us much unless you're trading crude or CL. However, in this environment, never know, our lovely little billionaireess is having a press conference at 12. Perhaps more important is the 20-year bonds. And then it's a big earnings day. Google, the alphabet soup, A and B both, I think, report after as does Tesla. after the close. And then these are morning calls of stuff that's already been put out there. Levitt, that guy's been speaking a bunch this morning, and the misdirection show was in full swing last night with stories about the Japan, the biggest trade deal in history with Japan. We're going to charge them 15%. So everybody that's driving a Tundra or a Toyota can have the security of knowing that their car's going to be worth 15% more when they go to buy it. Because if you think Japan is paying for this, or any other government, I think you should maybe back off the crack a little bit. Look at us go. So I don't see any news about this. I guess this is the Trump story over here, is why we had that. I don't know why we would spike up. What's this thing here? What a crazy. Look at this shit. Wow. I don't know what to think. I don't mean to sound political, and I'm really not, but, you know, freaking crazy is what it is. I don't care if you're, you know, Democrat or red, blue, green, or pink. It's freaking crazy. That's what I think. So try to articulate that as best I can here, because I know sometimes it's real easy to sound political in this environment, because, I mean, pretty much all the crazy's happening on one side of the aisle. Yeah. Yeah. So anyway, there's that. Have your spurs on at 9. Housing numbers are likely to be pretty disappointing. The misdirection show about how fantastic it works well, though, because they figured out that with the short news cycle and the control over the media, pretty much all this. What have you heard about the Epstein case and the dear leader being a pedophile and all that in the last 48 hours? Absolutely nothing. All you've heard about is Japan. Misdirection. It's classic. Pretty classic, elementary, and tried and true stock and trade of a stage magician. You know, it's misdirection. I think it's just blatant, but anyway. There you have it. So we got off to a start there. So that I'm pretty excited about the fact that the damn thing. Now, what I have done is tried to isolate the problem here on these restarts and this column by, obviously, if you want to do something correctly, if you want to troubleshoot something correctly, you got to change one thing at a time, not 10 things, and then go, oh shit, I wonder which one of those it was that fixed it, you know? So I first made sure that the GPU was and all of those things were functioning properly and not overheating and stuff, and that the bookmap was configured for the GPU usage, and that worked. And then yesterday evening, I had gold and I had crude oil additional over here, which I never trade, but I had been looking at, and I removed the two of them, which is not necessarily in line with my only change one thing at a time. But I did that, and it reset. So if I wanted to be real analytical about it, I could plug in gold again or crude and see if one of those affects the restart again. And of course, there's always the possibility that it's a coincidence, that, you know, suddenly something happened that, wow, look at this big. We've got 160 contracts living down here at 60. What is the liquidity? That's about it at this moment, I guess. So we're in a rotational period. We opened gap up big time. And I need to put that over here. I need to put my gap. This is how I do stuff, and I need to be on the right screen. Sorry. So this is going to be a this is gap high. What the hell day is this? 20 what? Wow. Hell, I'm a bunch older and I didn't even know it. Look at there. That's our gap high, and what we wanted to find down the road here is our gap low. Now we are aiming to close the gap. I better hurry or we're going to have the damn thing close. Well, there was, we came right down to our previous. First of all, it's important to understand that I view gaps in terms of range. There's our gap high. Here's yesterday's range. And we got right down within a few ticks of it so far, but we haven't closed it. I don't use balance or value area or those kinds of things. And that's, you do whatever you feel like works for you. So we're in a gap rules configuration today. And there we are. And what that says is, it's an old market profile-ism, but it's amazing how often these things prove out. If we open in a gap, up or down, and we close the gap relatively soon in the session, and if we are accepted within previous value, price is accepted within previous value, it's very high probability that we will trade across that value in the balance of the RTH session. So what did all of that mean? Well, here's a gap up. We're coming down here. Here's the gap close. If we close the gap and are accepted in value, high probability will trade across value to in this case, the value area low. Obviously, if we're rejected back out of yesterday's range or yesterday's value, the probability is that we're going to continue on in the direction of the gap. Gap rules, boom, look it up. Stottlemyre then probably usurped and claimed by Dalton and who the hell ever else is, 15,000 internet guys that are telling you how to do it. I think it's real funny. Now that I've done this stream, I Google around a little bit to see stuff, try to pick up an idea or two. One person puts out a video or whatever. I guess they do videos because most of them are not live streaming, but they'll put out a video that says open range trade, for example. And then the next day you open up YouTube and there's, as far as the eye can see, everybody's making an open range trade video or something. I guess if one is streaming, they piggyback off of that and off of the looks or the likes or the visits or whatever it is. I don't know. I'm not, as I said, in the pre-market, which starts every morning at 8 o'clock. I'm not monetized here at all with this stream. Likes and, subs and whatnot is great if you like the content or if it's helpful and you want to know a pre-market or whatever every morning. Tune in at 8 o'clock Central Standard Time. Do a reminder. I'm sure I said something in the pre-market, but I hope I did. I know I was thinking about it before the stream started about I try to always go through the pre-market pretty thoroughly and with my synopsis, and obviously in a gap up situation, the highest probability is to close that gap. And then I've already discussed the gap rules here. And we came down to that liquidity and they traded them out, eh? See that? Now, if you want to know for sure if they traded them out, you can see the trade outs, and there's 200 and something. There's a big buy there. Or you need you need the tape, and you can see what was actually executed. I'm not that Okay. What I know is this liquidity is gone. Liquidity is coming down above us a bit. We've got $1.35 at 69.75 right there. You can see liquidity very plainly here in the heat map. When it got in here, let's look at that for a second. Okay. Come on now, stop doing that, girlfriend. This liquidity of 136 or whatever it was at that time came into the book at 826.50. Stayed there till it lifted off or traded out right there. That's pretty handy, I think. Here's a big one that's down here. Here's 201 or 201.4 contracts, whatever, at 55. That's been in there a long time, probably a lot of the night. And started getting jerky and jumpy around here, and basically came in pretty strong and has been sitting there since 7:30 this morning, not so far away. Okay. So that's kind of how Bookmap works. That's the reason I continue to use Bookmap, is it's scrolling in and out and stuff. Is so far it is head and shoulders above the competition, which is disappointing, because I would like to. I mean, I would certainly like to be able to have one program that wasn't so expensive, and I don't think that's crazy. I've looked at Quant Tower. I've looked at some different things, right? For example, IRT. You can build a heat map type version here of in IRT, but it plots faithfully and does the bars and balls and all those kinds of things, and I can adjust the cutoffs so that these values thicken up or don't. And there's a dome right here, which is pretty handy. And also the price levels. But the problem is it's not nearly as user-friendly or as functional for me as Bookmap. For example, that's as far in as I can get it. I can't wind it in past 8:30. Now, that's one thing, is because it's set to the day session only. Now, if I set it to full session, I could wander in and out more, but, that's just, that's that. So let's run down and make sure I got everything right here, because there we go. Micros. Notice, I'll get us over to the minis here. Notice the last couple of days. This is Trump being an insulting little girl about Jay Powell. And that, you can see where that went. Up, up, up. Jamie Dimon and everybody said, don't do that. And then yesterday, even Bissett, whatever his name is, Treasury Secretary, said that he doesn't think that Powell should resign or there's any reason for that. But look at the 2 days. We had a doji with a big spike up, doji, spike down, doji. Now we got this thing. I'm not saying that I know how to interpret what that means exactly, but it's pretty interesting. Doji means big indecision. This is knee-jerk reaction, and common sense prevailed. These are indecision. And I suppose, just standing here thinking out loud, that indecision evolves around earnings and where we are in the state of earnings. Is a tough time to trade. FYI, anybody out there, be real vigilant in your self-control and trade your plan. I'll be right back. Yeah. Well, here's our gap close. Remember, here's our IB low, IB high. Again, if you're just tuning in, none of these levels are mysterious or complicated or difficult to understand. Oh, there we go. Well, that was a lead up to the housing number, I guess, and they didn't quite close the gap yet, but something happened right there. Not the housing number yet. That's only out at the top of the hour. I'm assuming this is a news thing. I would think without any question. What I was going to say was the IB high and low are simply the high and low of the first 1 hour of the RTH trading session. That's it. The rest of these levels are self-explanatory, and if there's any question, drop something in the chat. But yeah, nothing here is mysterious or magical. You know, I would prefer to be able to bullshit you into thinking you got to wear a pointy hat and listen to everything I say, but that's not the truth. The truth is, this is common sense and logic. The market is a random environment, and you need to, if you want a successful business, you need to approach it statistically. And I'm going to stop talking about that for a minute now while we come into 9 o'clock, and I'll look over here at something else quickly. The financial juice and investing.com. Oh, that could well have been a call. That could be the result of a morning call there too. I forgot about that. We're in earnings season. These are what I was going to say. These are both free. You can pay for them if you want to and get something more accurate, I suppose. But these are both free. So this could well be a result of a morning call from one of these guys, because we got AT&T earnings call out, but that was at 7:30. So I don't know. Home sales is at 9. Maybe the number got leaked. I have no clue what to say about that. And I don't do social media, and for sure as hell don't do the Trump thing, whatever that's called. You know, any of those smaller, more fake newsy. It's so funny to me that he's always squawking about fake news, and I don't know of anybody in the history of his entire life that has been more fake news than that guy. Pretty amazing. But it's the world we live in today, yeah? All right. So we haven't closed. Yeah, we just almost closed that gap, boy. Remember the gap rules. If we close it and are rejected back out of it again, there's a high probability we'll trade on in the direction of the gap. So we're going to hit that number in less than a minute. I'm never in a position into a number. And what I was going to say was be real vigilant about your trade plan. Have a vetted trade that you're going to focus on and anticipate it setting up and anticipate it, then trade it if it does. I'll talk about that in a second with where I'm going here in my IB trades. We're going to be 10 seconds. And this may be a nothing burger too. Who knows? We've got some liquidity at 54 and a bunch at 57.75. So they're on both sides of it. Okay. Well, the report should be out, and doesn't look like it was such a big deal. Existing home sales was a miss, but not by much. Forecast was 4 million. It was 3.93. Previous was 4, so it's a miss, which is to be expected. Sales change was minus 2.7%. Forecast was minus 0.7%. You can see that, so I don't need to read it to you. I'm pretty sure everybody here can read, right? Sorry about that. Yeah. And then 9:30, we got crude coming out, so. Not much reaction, huh? That's the bigger takeaway for me. I don't think that it was a big surprise to anybody that the economy's in the dumper and the inflation is ramping up. So, you know, I guess that ought to be pretty obvious that when inflation's going up, what's going to happen to the price of lumber, the price of real estate, the price of housing, the price of all of those things? If you've ever been in the construction business, you know exactly what I'm talking about. We get like 80% or 90 or 80 something, 80+% of our construction lumber from Canada. Let's slap a big tariff on that. That's a good idea for housing. So we bounced right off of that low and that gap close. You see where the previous RTH high right there? That's what that 64 number is about. And that would be the gap close right over there. The gap low, which would signify the close. Didn't quite. I guess we did take it. If you want to be real nit-natty about it, we got through there by a tick or so. So, yeah. Okay. Officially, the gap is closed, I guess, and doesn't look like much interested to be accepted or to trade further down into it, into that gap. Got a low volume node right here above us at 57. A lot of maneuvering right now, I think. So maybe a good time to talk about trading as a statistical business. I'll finish that conversation. If you want to approach, if you're interested in approaching trading as a consistently profitable, dependable business, as opposed to a hobby or a video game or gambling or whatever, and those are all valid if that's what you want to do. I particularly, and the purpose of this stream, is to have developed this and continue to develop or further develop this into a statistically significant, consistently profitable business that I can rely on for myself and my family and whatever else. Life, life's what happens while you're making other plans, right? You have to, in order to do that, if you're interested in doing that, then you need to, we have VPOC migration down. Here we go now. Oh, here's one. There's a setup. Not mine, but it is a one. You have to recognize that the market is a random environment, and it is a statistical fact that the outcome of the next trade is 50-50. That hangs a lot of people up, but it is the case. And actually, you hear about that virtually every day, and I don't know about everybody, but I always just blew it off as some kind of lawyer boilerplate and didn't pay much attention. Past performance is not indicative of future results. That is a statistical fact. This is a binary market. It can only go up or down. There's a 50-50 chance that it will go up or down on the very next movement. And that next movement has nothing statistical, or doesn't depend at all on any of the previous history. It's just like a coin flip. It's just like the disclaimer says, past performance is not indicative of future results. Those are probably some of the most important words that traders ever hear, and I'm sure that the majority of traders just blow it off and don't even consider it, but that's what it is. And in gambling, actually, which our business model, which is based on the same business model, they have a word for that called the gambler's fallacy. Oh, it's, that wheel is hit black 15 times. The probability's got to be huge that it'll be red. No, it's 50-50. It's actually less than 50-50 because in America, they added the zero, the green zero, and then they added the double zero, also green. And in Europe, I believe there's only 1 0. So they further reduced the expectancy from 50-50 to put the edge in to their side of the table. And that's a fact, Jack. So in order to have a successful business, in my opinion, you need to identify a setup, identify the criteria which validates the entry for that setup, and then away from the regular trading session in your backtesting software or however you do it, you capture a significant statistically significant sample set of that particular setup and those criteria. And that has to be a big enough data set that you minimize the effect of random distribution. For example, if you only look at 50 trades and you think it's a horrible setup because there were 10 losses, it's very, very, very likely that you could have, in a random distribution, you could have 10 stops in a row, or 10 tails coin flips or heads coin flips. It's a binary event, and it's statistics. Look it up, So you pick a setup, you determine the criteria, and you get a statistically significant data set of that. Mathematically, statistically, does that have an edge or not? Positive probability, an advantage, an expectancy, pick a word, they all mean the same thing. If it does, in the live market, whenever that setup and those criteria present themselves, you exercise that trade, and you rely on the law of large numbers to manifest the percentage or the probability to your bank. Your account, Ray Dalio, Tom Sosnoff, Mark Douglas, Trader Tom of the Best Loser Wins, and Tom B in the T-Lab, Rod. I mean, from the top to the bottom, anyone you listen to will tell you the same thing, that have figured it out, that have understood about statistics and actually winning in trading. It is a probability game. If you have an edge of 60% and you take 10 trades, okay, you might make $10. If you take 1,000 trades, you might make $100. If you take 100,000 trades, you make $10,000. You see how it works? It's just the law of large numbers manifesting to your bank. And I can't seem to get my little eyes working right here for this clickbait story. That's what I believe is the key to it. And if you want further evidence about that, it is the exact business model of a casino. They play no game which they have not pre-identified specific rules or criteria and a specific edge. Then on the casino floor, Their sole mission in life is to play that game as many times as they can and let the percent of edge multiply by the law of large numbers the profit to their account. They know gamblers will win. We know we'll take stops. That's a fact of life. But when a gambler wins, the pit boss doesn't run over and shoot the dealer or change all the rules. They just deal the next hand. And that's the philosophy and the mentality that you need to get your head around with trading. I believe. You can have your own belief, but that's what I believe. And I believe that because of all the very successful people in the world and the phenomenal amounts of money that have been made based on that exact philosophy and principle. Jim Simmons is the most profitable hedge fund reliant is the most profitable hedge fund in the world. Averaged over 66% return year over year for years. His hiring philosophy, I only hire PhDs and people who have done real science in math and statistics. They would never hire a person that was from the finance industry. And they did math and modeling. So, it's not me. And a casino, pick a casino. Except for Donald Trump, have you ever seen a casino that didn't make money and he did go broke with the Taj Mahal and bankrupt, and it still stands vacant, I understand, in Atlantic City. I've never been there, but I understand that. It's pretty phenomenal. But by and large, I've never known a casino to not make money. And that's the entire business model. Simple as falling off a log, but that's what it is. So in my case now, I am vetting the IB statistic, which says that the high or low of the first 1 hour, that's the definition of the IB, will be exceeded by price in the balance of the RTH trading session. And the percentage or the probability of that is over 97.7% in all four open types. 97.7% of the probability that the IB high or low will be exceeded by price in the balance of the RTH trading session. Now, there are two trades associated with the IB high or the IB statistic, and they are the IB continuation, it boop, 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 and down she goes and continues to go, or the IB failure, where it comes down, can't get any traction, and reverts back to the mean. Because in reality, the IB failure is a mean reversion trade, and it's typically the favored or the more anticipated trade in a balanced or rotational environment, whereas the IB continuation would be more applicable in a directional environment. And I don't know of any stats to be, obviously this is my journal, right? So I'm talking to myself here also. I don't have any stats or can't remember hearing anything particularly different around in a gap environment. And I wouldn't know which would prevail, basically, a gap rules or the IB. I think that they're mutually exclusive, actually. So what I'm doing now is the IB statistics, and I am not taking any trades. I am only taking one of those two trades, IB failure or IB continuation. F for C, which will it be? Now, that means that I have all the time in the world to talk and analyze and commiserate about what the market's doing and the world and politics and all that kind of stuff until 9:30, because the IB statistic is not set until 9:30. At that point, I can zoom in and start to decide which way I think the market may go. Do I think it will be an IB failure or an IB continuation? And this is a tough day for me right now. Look at this. We have two distinct distributions. The volume point of control has continued to migrate south suggesting that we are having accepted, not suggesting, indicating that we're having lower prices are accepted or being accepted as fair. If you consider, like I think Tom's, it's the fairest price. This is the most, remember, this is the price at which the most contracts have traded. Meaning, most people figure this is a good spot to trade, huh? And on the other side of the coin, best place in the world you can pick to diddle. That's the root of don't diddle in the middle, because this is the best place in the world you can pick to get your ass chopped up. So today we're migrating lower. We're down towards the IB low. We have just barely by a tick, I guess you could say, officially closed the gap. And I'm at a pretty big crossroad here as to what to do at 9:30. But for sure, I'm not going to be trying to anticipate. This is something that I recognize and I have notes about for myself. I absolutely do not engage until after the statistic has been set and is active. I was trying to anticipate the statistic and trade to that statistic. In other words, okay, here we are. I think we're below the VWAP. We're above the VPOC. We've closed the gap. Basically, this is a low volume node. I'm going to trade. I think we're going to take out the IB low and go short right here. That didn't work at all. Statistically. Yeah, sure. Sometimes it would work. And, the human brain has this phenomenal facility of remembering good things and not remembering the bad. That's one of the most dangerous things you can do in trading, I believe, is to break your rules and have it work. Move your stop and have it work. Because your brain thinks, oh, hell yeah, I'm doing that every time. And that's not right. That's not the way to look at it. That's not the way to succeed long-term in trading as a business. If you like gambling, you like whipping and spurring, you think you're a gunslinger, you want to get down to a 1-second chart and just trade the living shit out of things, knock yourself out. That's great. There's nothing wrong with that. If that's what you want to do. And that's the way you trade. Hopefully you don't depend on that for a living, but, because I don't think many people get far doing that. But that's just my opinion. And remember that this is my journal, and these thoughts that I'm sharing here are for me to review and listen to myself when I review the streams in my journal, and I'm talking to myself. I'm a firm believer in the fact that your subconscious mind believes what you tell it. I'm a successful trader. I don't overtrade. I'm not, reactive or spontaneous, and I'm going to trade these setups, and we'll see what happens. Now, yesterday was a phenomenal example of and a very successful IB failure trade, which I did not take because my trade plan says I don't counter trend. I don't trade counter to the context or the trend of the day so far. And at that point, the trend was up. The context was up, which would lead my thinking to, my decision funnel would be pointing to an IB continuation. And the IB failure was a magnificent trade, but I didn't take it. And, sure, I regret it. But I don't regret the fact that I didn't break my trade plan. And another thing that I'll throw out here is you should never change one of your most important rules, never change your trade plan during the live trading session. If you want to, go at night and when you're doing your homework and studying and you tip the whole thing upside down, throw it all out and start over, that's up to you. And that's okay. But in my case yesterday, I have a thing in my trade plan that I'm not going to trade against context or, with the retreating army, as Tom would say. And I don't. And yesterday I didn't. And the IB failure worked out magically. Let me see if I can. Well. So we're going to have the IB set in another 10 minutes here or so. We've traded right down to and closed the gap. What is the context for the day? Well, so far it's south. We are in a sense directional in that we've got two major distributions and the VPOC has been moving lower. So we are basically trading in this in the south direction, right? What else is going on here? So 8 minutes to the bottom of the hour where the IB will be set and where we will have the EIA crude inventories. They're Halliburton and all the guys here in West Texas are mothballing their fracking equipment. Price of crude is down. Drill baby drill was just some, nose candy for morons that don't know anything about the oil business during during an election cycle. There's no way in hell they're drill baby drill. The price of crude is down and they're not fools, and they're mothballing all the frack equipment because there's no value in it. So this inventory, the reason for that, this inventory is important. It's an interesting fact that maybe nobody knows or cares, but to do with tariffs and Canada specifically. America cannot refine the majority of oil that we're producing now, especially the fracking, because the refineries were designed and built, billions of dollars to replace them, to refine a different grade of crude, a sour crude, which we import in huge quantities from Canada and export our sweet to other countries that have newer refineries or natural gas, which we had surpassed Saudi Arabia and were the world's leading exporter of liquid natural gas last November. We are no longer so. So there's that. It's all adding up to a real shitstorm, unfortunately. This kind of VPOC action is a real sign of indecision, in my opinion. And let's look at something else. Yesterday was pretty surprising. We talked about this in the stream. Okay, so here we are now. Yesterday, the volume was 120%. Now we're under 100% today. At this is for this moment in time. Interesting. These are delta divergence signals. This is an ATR. This is overnight. Don't forget. This is yesterday, and this is today. So don't get excited. And these are harmonic rotations, which I've yet to figure out exactly how to use, honestly. Statistic stuff around the opening or the IB, and then this is the SPX. It's having a bad day, huh? The ES, open interest, way off. And here we come to 9:30. And we're stuck in the middle again. Was that old song from the 670s? Something to the left of me, something to the right. Here I am stuck in the middle again. So, a couple things here to think about as we approach 9:30, as I am anticipating what we may do. First of all, I don't have a hard, fast rule in my plan anymore. I did have, but it remains a contingency, and that is a range requirement. I need to have, or it used to be mandatory that I would have a unobstructed path to my first risk neutral scale in order for an entry to be validated. If we were up here, this is 62 and this is 60. Well, that's not 3 points. And there is a VWAP in the middle. So that doesn't meet the range requirement because if you're going to do a trade, which is mid or VWAP to VPOC, where the hell are you going? You got a point there? I don't think that's valid. Okay. That's where the kind of thinking that I think is important to start applying. And now I'm beginning to anticipate what I'm going to do here, because we're coming up to 9:30. So the IB statistic will be valid. And guess what we're doing? Here's the mid. What does that mean? That's exactly halfway between the IB high and the IB low. So here you go. If you were a gambling person and you looked at the day, you would say, well, context is down. VPOC has been migrating lower. Maybe there's a bit of a skew towards the IB low. Maybe. How many times in your recent memory, I know in mine a lot, that we have gotten down here and done some maneuver like this and ended up taking out the other side? I think I actually joked about that once in the T-Lab, and sure as hell that's what happened. And a few people were going, how'd you know that was going to happen? Flip a coin, dude. You know, yeah, a 50-50 probability, one way or the other. Which brings us back to there's a 50-50 probability on the very next trade. And that's a reason why predicting or trying to, this human desire to be right is one of the bigger problems to trading. And I'm not the psychologist here. I'm just parroting stuff I've heard, read, Spienberger and whoever the hell else. Unfortunately, a lot of this, most of what I talk about is not original thought, but it is to reinforce what I believe are valid thoughts in my subconscious. Wake up every morning, look in the mirror and tell yourself you're a loser, and sure as shit, you're going to be one. Sure as heck. All right. As my mom used to say, swearing is for people who don't have enough vocabulary. Okay, what do we got going over here now? We got a problem there. Where are we, boys and girls? Well, let's check. Let's go around the horn. We haven't taken out the all-time high. We're way above the VPOC. That's not going to be a question at this time, I don't believe. The micro composite. ES, yeah, okay. Notice how it's always funny to me how the market, and this is something that a lot of older traders talk about, they go back and repair the profile or whatever. Here's day before yesterday, here's yesterday, and look what we're doing today. We're building this in right here. If you consolidate all of these profiles together, which you can do pretty quick, it just turns into a big, almost perfectly Gaussian rotation or Gaussian distribution with, and some excess at the top and some at the bottom. When you're zoomed all in on these, daily or minute or whatever, some people get so far in there, it's hard to notice that kind of stuff. And I'm not saying that that's anything that I can trade on, but it is funny to notice. I mean, I've been hearing that since I started learning to trade with market profile back, I don't know, 2015, 13, something like that. Never was very good trading market profile. I don't think I had the understanding of the market, and I certainly didn't have the understanding of risk management properly. That is faux show. Well, we're gone 9:30. So guess what? The IB statistic is in play. We crossed 9:30 exactly at the mid. Or just this little scooch above it, I guess. Now what's going to happen? I don't know. As I said, I would be anticipating that we would probably take out the IB low. This day gives me pause. I don't know. What do you guys think, Antonio or GA? It's kind of directional looking, but I don't know how the gap figures in there. In terms of anticipating a continuation or a failure. I don't know whether anybody else is talking about it. Let's just look. I forgot about that. Well, some of the static boys are making money over there, I think. Or no. Not sure what's going on. Using the checklist feature in Bookmap. Not sure how the hell that works exactly, but okay, here you go. Oh, I'm sorry. I'm busy talking. This is from Static. This is Garrett Mansell. And he is talking about his first trade using this checklist idea. Looks to me like here's his long. Yeah, he's got different colors, right? So this is his POC. So here he goes long. There's his risk neutral scale. He's got 5 of them left with a target way up here. And his this checklist thing he's got over here, which is pretty interesting. And somebody else said, I got in just after you. Where's the checklist feature? So they're trading something I don't know about. What else is going on down here? Harry's a good trader. He's back. He must have been working. Okay. I don't see anything exciting going on about where we're going to sit with the, and I don't have time to be. The reason I do the stream again is that I don't multitask well. So for me to be looking over there and read some chat room and typing in a bunch of stuff, I haven't paid attention to the market the whole time I've been looking at it. Right? And that's not why I'm standing up here. By the way, these are standing desks and I don't even have a chair in the office. So I'm standing from around 6 in the morning until, granted, I go away and take, showers and whatever else, but I'm here at the desk pretty much until 1600 and then a little break and back on at the RTH Open and into the night. So I need to maximize the benefit of that time and that effort. I did notice yesterday, interestingly enough, for example, the NQ inside day, no IB stat at all. And similar with the ES until right at the end where we took it out right here. And then there was that IB failure. Now, the reason I point that out, we talk about the statistics greater than 97% that the one or the other is taken out in the balance of the IB, or balance of the trading day and all that stuff, of the RTH trading session, excuse me. And there's about a 32% probability that both will be taken out, which let me just look and see. In this configuration, there's a 26.5% probability that both will be taken out right here. And here we are, 97.5% that one or the other is taken out. What does that mean? That means that there's a 3.5% probability that neither will be taken out. That's pretty extreme, I think, isn't it? And so, having said that, now this is for the ES, okay? But let's just extrapolate. I would have been expecting, this is so there is a 3.2% chance or whatever, 3.5% chance, or 4.5, I guess it is, that neither one of these are taken out. That's pretty damn low. Obviously, that didn't happen up here. Now, if you're trading the ES, that might be more applicable. If you're trading the ES and you're, getting close to the close, and you're near one of the IBs and neither have been taken out, well, that would be a pretty high probability trade to go in that direction, I think. I have not vetted that, but that's one of the things I've been thinking about, and I think it would be worth looking into. I mean, how many trades out there could you name off the top of your hand that have less than 5% chance of happening, or greater than, less than 5% chance of happening? Not a lot of them, I don't think. I mean, if that's flawed logic, somebody let me know. Drop something in the chat, say hi, where are you? Ask, if you need to send me some money, let me know and I'll give you my bank account, all the usual stuff. I guess I got to post that wrap Lamborghini I got out there in the garage. And then I'll get some money. Then I'll get some viewers over here. Oh boy. This folderol with the VPOCs here, this darker or more bright yellow is the RTH session VPOC, and this more muted yellow is the full session or the Globex. In other words, here, Globex, here, RTH. This is just, a state of confusion as far as I'm concerned. This is telling me it's time for breakfast. And again, yeah, there are, I'm not working to vet those trades yet, but there are vetted setups in the T-Lab and wherever else. VWAP to VPOC, mid VPOC, that kind of thing. VPOC migrations. But there's no range involved and there's no continuity, There's been what? One valid VPOC migration trade to right here, and if you took that, you got your ass handed to you in the next blink of an eye right over here. Stand back, have one setup or two setups in mind, and then, yesterday, for several weeks or days now, I guess couple of weeks or more, I've been focusing strictly on the IB. Continuation or failure, as was the case yesterday. And we came trading up here, and I was waiting to see if we would continue on with the IB continuation trade, because that was the trade suggested or indicated by a context. Or at least that's what I had thought. And now that I'm looking back at it, I'm wrong. I was wrong in that thinking, right? I guess I was a bias. Or let me make sure about this. Maybe I'm just being a big old dummy here. Hold on. I only went 1.5 miles to school, so, cut me some slack. Here's yesterday's trade. Down until not even 9 o'clock. And we typically have a counter rotation movement, which is basically a responsive selling because we were long overnight. So that's the first thing you have to understand or think about, that I think about, is what's our first reaction going to be in relationship to the overnight inventory here? And then we start up. Higher lows, higher highs, pull back and continue up to here. Now we've gone past the IB here, and we're right smack in the middle again, pretty much like we are now. And then we start up. So I would have been thinking of an IB continuation to the top, and in reality, that was not a good idea. That I look at this bigger picture. I wasn't standing here when we did this IB failure. I will be the first to admit that. I had gone off to eat and shower and those kinds of things, which I typically do around the noon, across the noon hour, because I don't like that action then. But that was the classic IB failure trade and paid off to both of my targets. But I was just looking at this, that was not a good idea. I mean, that was not a valid idea to only be thinking about the IB continuation. Because at this point, what were we? Rotational, right? So there you go. Today now, not the same. Yesterday or overnight was zooming up. Here we can see it all right here. Come on. There's the open last night. What is the here's that big, we're going to make a big deal with Japan. Up. What the hell happened at, just before 8 o'clock? Well, that was more Trump posts about more Japanese stuff, I think. And so if you've got all this long inventory, don't you expect, overnight inventory is well over 100% long. So I think any reasonable trader is going to expect responsive selling to take profit. And that's exactly what they did. Now, what are we doing? Well, we are also in the gap story. We've closed the gap, and they haven't really exhibited any kind of interest to continue down in that gap. Maybe they're waiting for more news or more data, and they're thinking that the alphabet soup, close, and Tesla and stuff, they're reporting after the market. Maybe they're content to wait for that, or to, as has been the case a lot lately, there's all this news and tweets and all that kind of stuff, and then when the dust clears and the reality of what happened really comes out, it has proven to be different. So maybe they're waiting to see if all of this Japan's talk and whatnot is gonna stick, right? I'm not saying I know that. I'm just curious. I'm thinking out loud. One thing I know in a situation like this, and I talked about it yesterday also, this is retail soup, man. They are chopping the living crap out of everybody over here because there's we're going. These guys thought they were going down. All these people down here that are betting on the come, that figuring they picked the bottom and that we're not going to get into the gap. Where are those stops living? All the way across here. And all these guys that were excited about closing the gap and doing all of that, they got their stops up here, above the high, maybe even. I don't know. That's just a guess, but that's what I'm thinking at this moment. Definitely stops above the mid. We had this little poke up here and didn't get anywhere, and that makes them more confident that we're going to sell short, close the gap, take out the IB low, We closed the gap, remember, right here by a tick, but we did not take out the IB low. That is, in fact, where the IB low was put in, so there was no IB low to take out. Right, that is what made this low right here. Here's the IB. The IB statistic becomes active right here at 9:30, and we haven't gotten near it. We've been fluffing around. We were at the mid, exactly halfway between. Tough day, I think. Tough read, and a good idea to go get your trading spurs on. I'm gonna head over and grab another glass of tea here. More of the same, huh? Yep. Not apparently much interest in closing the gap, eh? Here we are back at the mid, and yeah. Earnings is tough. Rollover is tougher, I think. I've known, I learned how to trade market profile from a guy, principal guy was it, and his sidekick were both retired locals, shall we say, when the pit closed. And a lot of them I've heard, would drift through there about it. They wouldn't trade rollover, and a lot of them were real skeptical about earnings. Just because it's, they weren't intentionally statistically oriented, but they had a intuitive sense about it, right? And I've known in my old journal that's on one of my other machines that I used to keep up diligently, it would actually break down the trading results by day of the week and hour. In other words, between 12 and 1, I don't trade, and I don't ever trade on Wednesday. That's not an exact thing, but you know what I mean. That's why one of the reasons I like the newer idea and a little less granular that Rod came up with. I guess it was him, the RTH 1, 2, and 3, which is basically dividing the RTH session into 3 and grouping trades that way. the thinking behind all of that is you want to refine and more granularly, if that's even a word, identify where your probabilities of success are higher or more, the highest compared to the probability of failure. In other words, if you discover that, if you take a trade every day, every Thursday at 9:30, I don't know anybody could drill in this tight, but if every Thursday at 9:30 you took X trade and you had a 90% probability of it being successful, well, isn't that the way to go? That's the whole idea. And that's taking this philosophy that we're using or this paradigm that we're using of an edge and probability to the extreme, further refining it. I think you need to be realistic about it, and I believe that this is what it is. You identify a setup, you validate or vet that setup, and then the theory is, after I've got these IBs figured out and confident, move to the next one, so that you end up with a playbook which is ideally applicable in different market conditions. And this is not just something I cooked up. This is stuff that I've learned about, read about, understand to be true from the highest, most successful people like Renaissance Technologies and those guys. Just yesterday they were talking, and I was listening to TopStep TV yesterday evening because they came out with a bunch of announcements about stuff they're going to do differently. So I tuned in. I looked back at I don't follow it during the day at all, but I looked back yesterday evening to hear what was said. Part of the conversation they were talking about, they're going to do some things that sound okay. They're going to, first of all, when you go live, you pick one market and they will cover the cost of the data for your live account. For one market, or one data source. If it's a CME, they'll pay for that, so you don't have to pay that $140 or whatever it is. You can, as you increase your winnings or your account balance, that will increase your daily drawdown, maximum number of contracts you can trade. All those kind of things will be dealt with much more in the context of an old-fashioned prop firm where you had a constant discussion with your risk managers, and those kind of things were variables not set in stone. And they have increased the limits to where if you get a live account and are able to, what I gathered yesterday, able to trade it up to $1 million balance, you can trade up to 100 E-minis. ES minis. Let me rephrase that. That would be your clip size. That's pretty substantial. That's $5,000 a tick and $5,000 a point, for example. That's a hell of a lot of risk. But anyway, the point of that, where I was going with this, is they were talking. Oh, and there's no desk fees or any of that kind of stuff. Of course, they were talking about different ones of those fellas, Mike Patak and Jack and Dre, whatever his name is. they were all prop traders before they got involved with TopStep and before they all started it. And they were talking about desk fees. The typical desk fee for a prop firm was $1,200 a month. You were expected to work in the office from early to late, 5 days a week, and come in on Saturdays for school and stuff like that. And they asked Jack, who had apparently worked at a much higher level prop firm like the Citadels and stuff of the world. His desk fee was $12,000 a month. That was just to walk in and sit there. And the reason for that was they had hundreds of developers. All of the trading and software they were using was proprietary, including a $500 million microwave network between Chicago and New York. And, that's who you're competing against. And now it's much greater because that's before the days of the Citadels and the algorithmic traders. These are guys that were trading at a desk, trading manually, and Jack was, I guess, on the leading edge of the proprietary trader and the developers. And so you got to get your head around the fact that that's the market we're in, right? And that's why if you can be real disciplined and have a strategic, absolutely vetted or statistically verified edge, and just exercise that, in a little bit. This little bit of a trade that I have, my 2-lot risk neutral package. If you take both stops and you don't risk manage the trade to get the maximum potential out of the runner, just leave the stops as they go on with the bracket. That's $750, 60 ticks in the E-mini per trade. And I believe there's 252 trading days, not including weekends and holidays, I think, in the trading year. Let's call it 250. And let's say you do 70, let's say your win rate is 75%, 70%. That's $131,000 a year. Sorry. Figuring 70% of 252 trading days is 175 days and one trade a day. Pretty good wages. Now they're talking about 7 and 8 figure traders now. Big difference. But I'm talking about keeping it real, and I think I'm sure that if I was in my 20s or 30s, I'd be gunning for those high numbers. But what I'm trying to achieve now is consistent, dependable profitability. Well, what are we doing now except just getting everybody all teased here? They're teasing us. It's like yesterday, huh? Another thing about that, well, I've got, I'm just pontificating here while I'm, well, good for you there, G, I guess. I'm not sure losing 3K on Sunday night would be such a wonderful idea, but up 3,500 a day is great. Good for you. I mean, that's, I guess it boils down to the fact that does that fit within your risk parameters? I'm assuming that you analyze your risk, account risk and risk management and structure. That would be pretty loose for me, as I've talked about. Well, good for you on the opening swing or opening range trade, right? That's what you mean. But then, what opening range do you use? 1 minute, or I think Hogan, those guys use 1 minute. I know people use 3. When I'm doing I have a testing thing over there that I won't bore you looking at. I have a way to back test that, and I can change those parameters around, and then it does it. Well, you need to dial that back. Or if you're just having fun doing it and it's not a problem for you, well, then it isn't too much risk, I guess. That you got to assess your own situation. I'm approaching this because I lost my career, evaporated, a while ago, a couple months back, when the company that I've been with for over a decade sold. And a whole bunch of stuff just evaporated. So in addition to having been doing this for a while, I'm focusing to try to have, I'm much more relaxed to supplant that part of my life. But that means that this needs to be sustainable, dependable, consistent, approach. Much different than whipping and spurring and, 3K loss yesterday and 3.5K win today kind of deal. That's wouldn't work in the world I'm in. Good for you. And if you've got a whole other life, and all your needs are met and taken care of on that front, and this is something for you to do to augment that, and the risk parameters and stuff aren't so strict. That's the kind of stuff that each and every one of us has to decide for ourselves as a trader. And there's nobody's walking in my shoes but me, you know what I mean? The same way with you. Well, yeah, those prop accounts have upsides and downsides, just like with this thing here. And I mentioned that little math exercise here a second ago. So I think it's 252 trading days, not including holidays or weekends. Now, I haven't analyzed that I don't believe in trading those half days, like this shortened crap. And I suppose that's figured in there, but let's not worry about it. And let's say we're taking 70% of those days. That's making 175 days. Say we get a successful trade 100 or 70% of the time. And we took a trade a day, which is not realistic, but you got to start somewhere. Times $750. That's $131,000. Well, I'm copying 5 accounts. That's $650,000. Now, first of all, that's only applicable in an XFA. The minute you go live, that goes out the window. But that's the potential. If you could stay in an XFA, come on. This is like, it's not realistic to think this way, but assuming you could be in an XFA, copy to 5 accounts, and trade in that XFA for a year with a 70% win rate and take a trade a day, which is complete bullshit. We all know that, but you know what I mean? Hey, it's the internet, baby. I'm an influencer. Send money. Just like Kevin O'Leary is a billionaire, and people actually started, I think, Shark Attack. People actually, ping that guy, and he makes comments and influencer stuff on YouTube. He's an actor. He's never been in finance one day of his life, if the truth is known. You know what I mean? But that's the internet. So I don't think it's too far fetched to say this. Say you got 50% of the time. That's $325,000 a year. That's more than I made in my career ever in a year. Absolutely, by a long shot. So there's that. Now, I think the way to do that is to focus on one setup, vet it, and it's not new. I mean, how many thousand times have you heard Tom say the same thing, or Rod, because I know you're in the T-Lab, or anywhere else, or, Trader Tom, or, the Hogard guy, or anybody. Tom Sosnow. What you want to do here is that you need to take a number of occurrences for this edge to pay, blah, blah, blah. That's all it is. And to use the hunting analogy, you don't just walk out to the top of the hill and start shooting all over the place and then wander around and see if you hit something, you know what I mean? You kind of stalk it, wait for the game to come down there or whatever it is you're going to do or however you do it, and then you hunt. And that's the approach that I think will pay off. Otherwise, out of that $3,500, if that was one trade, that's fantastic. And let's see. Well, I don't know. Never mind. Anyway, it's none of my business anyway, but yeah. It's all your personal journal. So you just got to do what resonates with you and what, you believe to be true. There's people on the internet or on YouTube anywhere that are talking all about what a great strategy it is to average down and do all this kind of crap. Martingale. I absolutely don't believe that stuff. Look at here. Was this a price check at aisle 3 while I'm busy talking? Look at there. Now, if you're trading one of these Tom setups, that's a trade, right? Right up to this big liquidity sitting out here. Didn't get anywhere, failed, and trading back down. So basically outside in, mean reversion. But you've got a lot of stuff in the road, so it wouldn't work for me. There was no meat on the bone or range. But I'm sure there's, Furs and a bunch of guys in the Traders Lab that probably did that. Good for them. That's not one of the trades I'm working on. I'm working on the IBC or Fs at this moment. 73s. Yeah, that's one hell of a. Well, the 73s are the IB high as far as I'm concerned. I mean, as far as my data is concerned. So you took the absolute top of the mark, and that's perhaps. I'm sure that's a strategy. You know, if the market flies up one direction, sell it. If it flies down one direction, sell it as quick as you can, and then see what happens in the meantime. I guess, and it's worked out for you, so good. And I would hope that you took it off down here around 53. So you got yourself 20 points or something out of it. That's great. And looking here, you had no heat essentially. So yeah. I don't know what that trade would be called exactly so fast. Like Hogan, those guys, they call the opening range trade. What they do is they put a buy limit above the high and a sell limit below the low of the first 1 minute. Not on the ES though, on gold and crude. I'm not sure if they do the NASDAQ or not, but anyway, you know who and what I'm talking about. And so whichever one gets hit, they take off the other one, obviously. And then they put the stop below the, for example, if it was the IB high, if it was the initial balance high or the opening range high that gets hit and you're going to go long, then your stop would be below the low. And that's what they do. Oh, great. I mean, that's super. Worked out good for you. That's great. Absolutely. And this damn thing, this volume profile is still not right. If you notice, here's the IB high, and there's no volume up there. This goddamn thing is really irritating. Really irritating. And from bad to worse. At least when I had to restart it manually, the damn thing was accurate. Now it's just horse shit and bus tickets. Yeah, well, is that right or not? No. And I can assure you that there is volume up there. Right there. And now it's important to recognize. Here we go. Here's today. There's the volume profile. There's the IB high. There we went. There's the open up. Here's where our buddy GA got in short and is now rubbing my nose in it. And the important thing to remember is this is the exact same data. These two platforms, RT and IB, or whatever this is called, Bookmap, are both running on the same rhythmic feed. So there is absolutely no excuse for this not to be accurate. Only in that the Bookmap is not working right. And I don't pay those guys the money for Global Plus here to have that be the case. Now, GA has you bought Global Plus, right? I'm pretty sure you told me that. I'm sorry I didn't do that some time ago when I had my job and had lots of disposable income. Because this monthly fee irritates me. Here, so. I'd looked into it. The only software that I bought and own, well, you can't do that with IRT. The only one that I bought and own is Jigsaw. There's a blast from the past for you. And I will say that if you can trade with the dome and you're okay with just, with that, Jigsaw is absolutely the most stable, accurate, precise tool to use in that regard. And that's how he started. I mean, Peter built that as a dome. He reconstructed the tape before MBO data and all that stuff. When it was just level 2, before even level 2, when they could reconstruct the tape and end up with a full book. So yeah, there's that. But I'm pretty dyslexic, so I mean, I can pick out there 233 and 150. But if I'm in a hurry or something, this starts turning into soup, and I'll, whatever they call it, with the dyslexic people do, transpose them around or whatever else, a lot. And getting older doesn't help either, of course. So yes, sirree, Bobby, here we are. Stuck in the middle again. I don't remember who made that song, but now it's in my head. Something to the left of me, something to the right. Here I am, stuck in the middle again. However that goes. Whoever sang it. Somebody in the 70s or late 60s. Now, I don't want to repeat the same scenario as yesterday where we had a market pretty much exactly like this. And finally, about 5 after 12, I said, screw this. I'm going to go take a shower and whatever else. And literally 10 minutes or less after I walked away, perfect IB failure and straight back down to both targets without any heat, without any muss, without any fuss. Whether I would have taken it in hindsight, in reality or not, because at that time, my thinking was that it's counter trend. I don't know. But, shit happens, eh? By the way, I got that music sorted out with Epidemic. If it's, I can't hear it. I don't monitor that. I have a quiet environment here. If it's too loud, too soft, stupid, whatever, let me know. All right, this is, I think it's a piano playlist. Let me just make sure it hasn't gone over to cartoons or something. I just happened to think about it. Yeah, it's a piano list, but there's only a few left, so it'll change. I'll need to change it for too long. So here we are. Weather's been kind of nice lately. I don't know wherever. I know Antonio's in Portugal, where it's pretty much nice all the time. And GA is back in Kentucky. I'm in the Houston, Texas, which is a place I never thought I'd live in my life. I came back here when we moved back here from Kuala Lumpur. We had an office here, and they wanted me to be near there, so that's why we settled up here. And then got our daughter into high school, and she didn't want to move, which we could understand. So we waited that out. Now she's just graduated, and then of course the job evaporates just before we could execute our plans to move up to Colorado. But I will say that right now the weather's been pretty nice the last few days, about 83 F. Which is something around 28, 29 C. And AMD is up 2.4%, it says. The little thing at the bottom of my computer there, if you see that. Now it says very hot weather now. I thought it was kind of nice. Maybe the temperature is not working right. Every Sunday I go for a 10.5 mile or so jaunt, and it was week before last. It really knocked my dick in the dirt. Took a while to recuperate and rehydrate. Yesterday or last Sunday was pretty nice. Here we go. Now, if I stand here right through till the close, nothing will happen but this, right? Unlike yesterday. What I do, I'm using the static journal, which Rod has developed, and he put a really nice ability in it, built in a really nice ability for missed trades, kind of like the Tom B, error cost calculator kind of a thing. And you can also post snaps of this trades and along with all the statistics that you put in about them and everything like that. So I use the functionality of Bookmap with its excellent replay capability. It replicates exactly every trade, every movement of your mouse and the stuff you do with the orders and all that kind of stuff. If it's a trade you took during the day, it does all of those things exactly. it also will trade exactly like the real time. And you can set it up for, instead of just the multi-brackets, you have multi-brackets sim, which is for that environment. And you can do everything exactly the same. So what I do, if it's a missed trade, is in the period of time between 16 and 1700 when the market's down, and I want to capture a missed trade, not just some crap, but something like yesterday where there was that IB failure when I had walked away. Then I do that and I identify it as a replay and a missed trade capture and those kind of things. And then I put that in the linked, or there's a place you can drop it with the trade that you've entered for that missed trade. And it's real interesting to see, but you have to be honest with yourself, right? I mean, it's like, who wants to bullshit themselves about something like that? Then it's real interesting to see what your P&L is like, your balance or whatever your P&L is like with and without those missed trades. Pretty shocking. This is how I do. This is how I do the missed trade. This is that. The reason I'm showing this is the missed right there at 12:15. I said, screw this. And I even talked about it on the stream. Well, this is a lot of fun. I'm going to go shower or something. The second I walked away, this happened. Perfect IB failure, test up. And one of the rules I have for these replays and this missed trade thing, I put the bracket on and don't touch anything. Just step back. And there's the entry, and there's the scale, and there's the target. Zero heat, and I notate very definitely that it's a misvetted trade and for the static journal and whatever else. But this is how I made, sorry I didn't capture from the open, but it was exactly like this right up until 12:15. And burp. Timing is everything, right? Timing is everything. Yeah, I can imagine you're just trading like you're killing snakes, dude. If you enjoy that, that's fine, but I shouldn't say that. People enjoy doing heroin, I guess, but it's still not a good idea. If that works out for you and you have statistics to show that you can be profitable doing that, that's fine. Otherwise, if not, then don't. That simple. 30 trades. Do you mean 30 entries at exits, or do you mean 15 entries because different software does different stuff, right? And or is that one lot each, or 10 or something? I don't know. Now, 63% win rate is a positive expectancy. Win percentage isn't necessarily. Some of these guys on YouTube are talking about, I've got a 90% win rate and all this kind of crap. Yeah, I can have a 90% win rate too if I go for one tick. What was the positive number of ticks, points? I prefer not to. Yeah, there you go. That's what I was thinking. And that's still high in my opinion in the first 2 hours. But that's my opinion. And don't forget that you're talking to a guy that when I first started trading back in 99 and didn't know anything about this business and came over here in the middle of the .com moved here from Southern Africa because of the internet cost. Moved to Coconut Grove so that I could get cheap internet and trade, and had no idea what I was doing. It was the end of the dot-com bubble. The trading platforms were like arcade games, and I'd trade 100 trades, 100 trades a day, and promptly lost 6 figures. Had no and part of that problem was 911, but still, yeah. If you took 15 trades today, you got a 63% win rate. How many ticks? Right over here. What's your tick P&L? Well, your dollars, but it's none of my business or anybody else's as far as I'm concerned. Now, that's why I have this set for ticks. For example, when I do one of my trades, one of my risk neutral 2 lots, and it takes both targets, that is 60 ticks. So you can have a 90% win rate and have realized, over 15 trades and have realized 15 ticks because you took 1 tick profit each trade, and that means you've got 100% or 100% win rate. Win rate doesn't mean jack. What matters is what risk you had to your account, what risk did you put on with regard to your account, and how many ticks or points or, however you want to look at it, did you win or lose? That's what I think is important. Now, one thing that you may not know, which I didn't until it didn't matter, told me the other day after I was bitching about needing to talk to Bookmap about not showing the P&L in dollars, because that's the reason I started keeping this hidden all the time. I didn't ever want to see my P&L. And I also kept this column hidden because I didn't want to see the P&L. If you right click on any one of these guys up here, you can change it to however you want to see it. Ticks, currency, points, and which metrics you want to track. So after he showed me that, I was pretty happy. And I reactivated this thing. And that was a big help. And now, also, I suppose you know that if you look at the statistics thingy that Bookmap has, a lot of data down here. Symbol, average price, in, exit. There's no trades here, so nothing to really show, but max size, fill, P&L, running P&L, MFE, MEA, all that stuff is available. And I see somebody now, Garrett and these guys, using this checklist thing, which I don't know anything about. But anyway, the win rate story, be real careful that you're not kidding yourself about the win rate thing. If you risk 2 contracts per trade, how many ticks did you make, win, whatever? And that's the important part. Yeah, there you go. Good. I figured you probably did, but for the sake of the stream or whatever. Because that's one of the big BS traps that a lot of the influencers use. And I think range, a risk range or range requirement is a good metric or a good guardrail to put around trading too. In my case, it was that I couldn't have a valid entry where there was not an unobstructed path to the risk neutral scale. In other words, 3 points or 12 ticks. Well, there isn't any here. No trade in any of this area would be valid. This is kind of a crapshoot. 57 to 60. Well, it's not quite, because it's, this is 57.5 and this is 60. You know what I mean? It's like splitting hairs, but that's, and back over here, it wouldn't be, because here you are and there you are. So that used to be hard and fast written into my trade plan, and I've kind of made it a also ran condition, because based on the market, because when that is hard and fast in your trade plan, you'll stand for days and not take a trade, unless we get into this real volatile environment, and then that's a whole other thing you got to deal with, risk to mitigate there. But you can stand for days and not have a trade where you're not more than three handles clear between levels. And I'm calling a level any one of these lines, or I'm not, liquidity like this, I'd never qualified that as a level. But any one of the actual session prices, or mid or VWAP, or any of those, I definitely considered to be an obstacle. And I got that from Tom. It's, most of the stuff that I'm talking about here is things that I may or may not have thought about first or second, but definitely have thought about afterwards. In that particular case, that was Tom's, he talked about that. Tom B in Trader Lab talked about that a lot. Not enough meat on the bone is what he refers to as. And I'm sure he trades, like we've talked about it a lot, I'm sure he trades completely different. I'm not sure, but I imagine he trades completely different. Well, the only way you're going to, if I understand your risk neutral percentage, is if you use a bracket and your first target is your risk neutral scale, and you take 20 trades, and in 10 of those trades, you achieve your T1 bracket, which means your risk neutral scaled, your risk neutral percentage is 50%. What percentage of the trades that you take do you achieve your risk neutral scale? And be sure and remember that you've got to have them the same all the time. In the way I look at statistics, if you have a risk neutral scale of 1 tick today and 12 ticks tomorrow, I don't think those, you know what I mean? I don't think those ought to be in the same statistical group. I have a very fixed, this thing. It's not a big secret. This also was a kind of an idea that came from Tom roundabout and Rod and some of us, but 12 ticks, that's 3 points. This is my risk neutral scale. Half the package. That's how it works. Out of X number of trades, what percent of the time, how many of those trades achieve this scale? And that's your percentage. Boom. You can come back to scratch. You can start dealing with all the times you overmanage and, trail up and do all those kind of things. But that's the risk neutral percentage right there. Simple. If I understand the question. And you can do all of that stuff. I mean, I've got a journal where you upload your rhythmic data or whatever. Static has got his. It's easy on an Excel sheet. There's probably, well, I don't think they have any journal to do with, TopStep probably does. Well, I don't think they do. I don't think TopStep splits out your brackets like that because they don't typically think about them, which in my opinion is a less than professional way to approach it. Now, one of the things that Patak was talking about yesterday on that announcement story, a couple of things for anybody that's using a TopStep account or whatever. He announced a bunch of stuff, should be interesting to go back and listen to. And he made a comment or a slip or whatever he called it. Every Tuesday, there'll be an announcement about some new thing for the next few weeks. One of the things he mentioned was that there will be OCO bracket orders coming into TopStep X, which, yeah, should have been there from the beginning, but stand by for that announcement. And something about easy, frequent payouts. You know, who knows? Sometimes I think he does a couple of pretty long lines before he starts talking on TopStep TV. He sometimes talks faster than I can listen, but, you know, I think he's a great guy, and I think hats off to him. He thought of and created this prop space on his own 12 or 14 years ago, and with these few people around him, and millions of dollars out of it. And more power to you. That's the way to do it. And he actually commented about that yesterday. He said, well, he had been trading. He lost 98. He went to trade in the pits. He lost 98 grand. He read, I think he said, a couple of books. It was just now evaded me which two they are. It was something like a Mark Douglas book and maybe I don't remember the other one. I don't want to put words in his mouth, but basically about risk management and about trading. And after he lost that money, he had to go to a prop firm in order to try to be able to trade. And they said, okay, here you are. Here's one micro, or in those days was before micros. Here's a mini. You can trade one mini. And after 2 months of being profitable with one mini, we'll let you go to two or whatever. And he thought to himself, well, there's got to be a better way to do this. And he had to pay $1,200 a month desk fee and all that. Oh, here's a news result here. Or you can bet. Oh, so we've got a big deal with somebody. Look at that. Oh, yeah. Now, that is where not having a bracket, not having stops can ruin your whole day. And, of course, everybody that was long down here and is thinking they're a freaking genius, right? I'll try to get to the news and see who said what. My guess is it was Random Risk. Had something to say. I don't see anything yet. It certainly wasn't the EIA report. Oh, no, it's not her yet either. Well, Levitt doesn't start talking until noon, so that couldn't have been a press thing. It's not the bond auction, so I'm guessing that pretty quick this'll update with whatever that was. Now, Rod and Company would be looking at this as a sharp V reversal, where they would have shorted up here. I'm a little less. For me, that kind of an extreme move is definitely news. Look at there, 697 contracts bought there, and we're still going up. So something happened. I'm not getting anything on juice. This would be those times, I guess, where paying for the feed would be nice. I think it's an expensive bill. I think it's like $1,000 or something. Look at them go. Something happened. Absolutely. I don't know. Beats me. Something going on. Financial juice just fell over. If you're seeing that, I guess something hit the market pretty hard. I have no idea. If somebody knows what that was, let me know. Well, if you got your cowboy hat on, there, boys and girls, you got short up there. I'm not even getting anything on IRT reflecting that big move yet. But then again, it seems to be pretty. This is something about IRT that's weird. I want you to look at this. Notice the Renko for the ES, and the bar is progress bars all the way at the left, indicating indicating that it should be there. But if I get zoomed in too tight this way, it stops updating. And now we've had this little episode right over here from 10 o'clock. So there you see I was completely asleep at the wheel. And if you were fast, what the hell is this? Here we go. If you were fast, you got the IB continuation or the retest. And I was certainly not. So if we zoom out, there's our IB statistic. Back down through, didn't go anywhere, and now we went up again. So that was the IB continuation trade, which I missed. And to be honest with you, I was surprised by this news move, and the thought of the IB statistic didn't cross my mind. Embarrassingly, but that's honest. And I was looking for the news of what caused that. But in reality, here's the IB stat. Come back down. Perfect setup for the IB continuation. Nothing below us. Nothing below us. Back through it again. Boom, away we go. Now, where are we at? 74 to, well, there's 10 panels. That's 10, 11, 12. Damn near got to both targets. So I'm going to bed and cry if you need me. Yeah, they close in on. Hey, Richard, what's up, man? Okay, closing in on something is they haven't. Yeah, that Levitt or whatever. No, the little guy with the ponytail, Lufkin or something like that. He was talking about, yeah, this Japanese deal could be a model for other tariffs or something like that. Okay, great. Thanks a lot. Appreciate it. I'm more pissed off at myself for missing the IB statistic that I've been standing here looking for. And here we come back down for it again. However, having that happen based on that random news, I'm now curious, I couldn't say with all certainty that I would take the IB continuation trade at this point. Thanks, Richard. That guy, whatever his name is, his son just happens to be the CEO of a one of these crypto brokerage exchange things. I don't think there's anybody involved with this new administration that isn't on the come and working every angle they can get for themselves and their family. It's kind of weird. Very weird to me. I didn't even think to look at FT. Typically, I'm surprised that nothing has come through yet. Oh, here we go. Here we go. Yeah, there we have it now. It fell over completely. On my end, anyway. So there you have it. Well, good. I can rest easy now knowing that we're going to have a great trade deal with somebody. And all these people think that that money is just going to get paid to us by the companies, and that just strikes me as a completely crazy. I don't know. I don't know at what point the shoe's going to drop and people are going to figure out that that's not the case. But I guess. So. Oh, great! Rod and Company were in longs when that hit, so they've gotten they have gotten it to their profit targets. Yeah, that's pretty great. Rod and Garrett and those guys in Static were in longs ahead of that. They were sitting long down here with their stops up here at the ETH highs, or their targets at the ETH highs. Their second target, or whichever after scales. So they were trading, obviously not trading the the IBs. And that's the advantage of having multiple vetted setups. Yeah, pretty darn bummer. Good for them. So 2 or 3 of those fellas were sitting along down here unscaled, targeting these overnight highs, and are tickled pink right now. Well, well, well. Huh. That is just pretty darn disappointing there. That's where I suppose a youthful quick thinker would have got ahead of that. And I will be the first to admit I didn't even consider it. I was so busy trying to decide what that was all about. I didn't think about the IB high. I lost my focus, and I certainly didn't. This was pretty much of a perfect setup here for the IB continuation. Yeah, sucks. And I can't afford to be doing this. I mean, I need a better result. Yeah, I understand. I got it, Richard. You're absolutely right. And, one of the things they teach you in flying is identify, verify, and then react. And that's, yeah, my immediate thought was to identify what caused that. And I didn't, but I will say I didn't even, I didn't consider the IB statistic at that point. And here we are. Now we haven't tested back through it again. I'd be sort of hard pressed to take it again now because, the market might figure out what was going on and do kind of what they did yesterday, which was, or last night after that big pop, and traded right back. And then after it after the bloom went off the rose, it traded right back down to where it had started again, which is, you'll notice happens a lot with news. It would not be out of the scope of possibility or surprising to me at all if we're right back down here around 67 in the not too distant future. But it still sucks, especially when Rod and Garrett and several of the fellas are over there. We're trading a different setup, had scaled, and we're sitting with their targets up around here and got them. And here's a post from Rod, 1054. He's entered right there. And there's his target. There's the overnight high. And we know from experience that was hit and exceeded in about 2 or 3 minutes after this post. When was that? Oh, no. Just before this hit. So, yeah, lucky and good timing. Well, remember that, in my opinion, luck, I always love this one, and it is so true. Luck is when preparation meets opportunity. Rod has got his head screwed on. Now, you'll notice that this is interesting. You'll notice that Rod is not doing the risk neutral scale on all of his trades anymore because he, quote, I got pissed at seeing half of my profit go away at 3 points. And he's trading a 4 lot, or was. So he is now what he's, in his own words, I am focusing in on only A+ trades, which is really paying off and has reduced my number of trades, so my exposure to risk into the market. And a month or so ago, he posted his monthly results in static by just the calendar and static, and it was only over 43 grand. So he's doing very well. And couldn't happen to a nicer guy as far as I'm concerned. Here was Garrett's story. Oop. Somewhere around here. Yeah, I don't see him actually, but yeah, so there you go. That is proof positive how it can be done. And that's the way to do it. That's one trade. Now, this is luck. How the hell do you know that's going to happen? You don't. I mean, that's a random chance. But sticking to your guns and being in the right place at the right time and having trades on and not, cutting them short, managing them properly. And Rod is very, very, I've noticed for a long time, he's extremely good at, he uses these statistics and these levels to his advantage. He'll target the extremes like Tom does, but at least in Rod's case, in my case with Rod and being in static, is he posts and you see him. It's not like you just have to take it on face value. And he'll put this target up here. Now, did it go way above his target? Uh-huh. Is he upset about that? Probably a couple of cuss words off screen or whatever else it is, but no, he got his target and he's moving on to the next one. So that's the way to do it. And let's just think about that for a minute. I don't know where his long was. I don't remember. So let's say 60. So there's 16 points. So what do we got here? 16 handles times 50 times 4. That's a $3,200 trade. Assuming he was in a 4. I mean, this is just assuming, And remember, don't assume. It makes an ass out of you and me, or however the old saying goes. That's the way to make a trade. That's a nice one-day trade for, and go to the beach or whatever. Good for you, man. I'm glad you're on fire. That's great. Well, as Tom would say, and I'm not good at this, but I, do as I say, not as I do. When you're in tune with the market and you're hitting on, you're clicking, then go for it, maximize your edge and maximize that opportunity. What I tend to do, which is, I think, bad news but maybe sort of typical, is after I've had one or two trades, in this case, it would only be one because I'm now doing the IB thing, but then I back way off and I don't want to jeopardize that with a loss, which is not the right way to think. You should, that trade is over and done, and what's the next one? And is this in my playbook, or is this a vetted trade that I have taken care of? Now, here is an example of that. We just did an IB test. I'm talking, and I didn't trade it. And here's four handles, and that would be a scale. Now, looking at this, I'm a little apprehensive if we're going to get much higher. We've got lower lows and lower highs off of this big high up here. But had I taken the IB continuation trade instead of talking and typing right here when we tested it and didn't get anywhere, then I would be scaled and would have no reason to be worried and would let the trade play out. So I'm not doing very good today in terms of focus and recovery. That's sorry about that. That's for sure. So here is that trade down. There's the IB test. Didn't get anywhere. Get long, say here. You're scaled up here. Well scaled up here. And now it's, helmet and feet up. Just looking backwards, I would say we may likely sell down because it's lower highs, lower lows, and this was ridiculous. This is just a knee-jerk reaction. So, yes, I did miss that scale, but I'm not convinced that it would be going for the long haul. The unfortunate part about it is if we come back down through here and looking like it's going to revert, there's no meat on the bone anymore. Well, kinda here, I guess, at the open. Remember that we're just flopping around the open right now. We have essentially gone exactly no place. Well, we've gone 1 point since the open. Well, yeah, it is. If you, that's why a lot of people have different ideas about time frame. time frame that you're trading. Now here we come down again. And I'll be real honest with you with the fact that I don't feel discretionarily, I do not feel like this is a setup for an IB continuation. I think we're going to go lower, and maybe I'm right. We're going to get right back to the scene of the crime pretty quick. Had I jumped on that right at the IB high, the IB high, on that short, it would have been a scale again. Is it going to go through these levels and liquidity? Got 159 contracts here at 70. Then we've got the mid, then we got the VWAPs, and we got, our old buddy, the VPOC down here. Lower lows and lower highs. What does that mean? I don't know. Pile of liquidity, 215. They're loading up. They're stacking down here. On the bid, baby. They're on the bid down here. A new all-time high, by the way. And notice that it was put in the RTH session. You see? Who said that in the pre-market? That's one of that's part of those old truisms from the days gone past that seem to actually have some merit. Had we left it well enough alone, this would have been the all-time high in the ETH session again, as it was on the 18th. Now that's completely been taken care of up here. This market is pretty ready to jump, aren't they? I mean, we're closing in on something that's like, it's like you walk into the bar and you slide up to the bar stool next to some good-looking gal and you're closing in on her. Well, that doesn't mean you're in bed with your boots off. You know what I mean? It's funny. But boy, I'll tell you, this market, they are ready to go for any reason. Your trigger. Hair trigger, baby. Okay. Who was that masked man that said we were going to get down here to the scene of the crime? That'd be me. And, you know, nobody's predicting anything. I am anticipating, based on past experience, that when we have a gigantic pop like this on news, very frequently do we return to the scene of the crime. I think that's actually that's one of whatchamadincus Mariah FT71's favorite things is the SOC. And another, tradeism is higher or lower highs, lower lows. It's not rocket science, or I'm not, don't have a crystal ball or anything. It's just try to apply some or as much of that experience as you can. And we're not there yet. We're not here to the scene of the crime. But we've gotten a hell of a lot closer than we went up, So this VPOC or IB continuation didn't go. I'm not confident enough in any of this, and we're having a consolidation here to take the VPOC or the IB failure either. And look over here. We're just kind of stuck right in the middle of this low volume area right here. I guess I'm a wuss when it comes to that part. If I was at all convicted in what I'm thinking, this would have been an IB failure short. Not scaled yet. Not scaled till we're down here. But nonetheless. I suppose, yeah. I'm not sure about the absorption part and all that, but I guess if you want to think about it that way, it got absorbed around 84.75. I mean, right? That's where it quit. The way a market goes up, first of all, this is important that I need to repeat every day, and I often forget. The futures market is a zero-sum game. If anybody ever says to you, or you hear them say there's more buyers than sellers, then my suggestion is switch channels, turn around, tune out, walk away, whatever, because that is complete bullshit in this futures market. They are contracts. For every buyer, there is a seller. For every lot contracted. Now, the way the market goes up is aggressive buyers and sellers. To say that there are more aggressive buyers than sellers? Yeah, absolutely. When I reach across and go up here, I'm being aggressive, and that's how the market goes up. When a seller is aggressive and they reach across to hit the bids, that's how the market goes down. It can happen in a big hurry when they just start pulling out of the way, when the offers start pulling out of the way, and these guys got to keep reaching up, or in the case of a stop run or a liquidity vacuum where somebody plops in a huge order somewhere. Let's look at here. Say there's 300 or 400 contracts available from 71 to 78. And somebody plops an order over, somebody dumps a buy over here for 500 contracts. It's going to clean out all of these, every price level. I'm sure there's some algorithm that'll be refilling, but without being technical about it, that's a liquidity sweep. Or in the case of a stop run, if they realize that there's a bunch of stops at a level and somebody throws an order into those stops, they start firing automatically. And remember that a stop turns into a market order. and it will fill wherever it will fill. So I'm not sure that there's as much planning and stuff in the market as we would like to think. Don't know. And you know, and I'm one old guy standing in front of 6 or so monitors here at a stand-up desk talking, right? Talking in my journal. I am not trading for Citadel, or, you know, I'm not Jack that was trading on a $12,000 desk fee and a $500 million microwave internet. You know what I mean? So I don't know the ins and outs of all of the market. I know what I see, and that's what I think. I do think also that we're just approaching the scene of the crime here. 2 handles away from it. Now I would be scaled at this point. And I would have been scaled with no heat. Here's a bunch of selling. These dots that I have are delta. So this is buy delta and sell delta. Sell delta. And you can change this stuff around. I mean, you can change these levels. You can dial in or out all of this kind of stuff with Bookmap. Have one at every place, whether they accumulate them or not, and a lot of different things. Which I'm trying to make it simple, you know. I'm trying to make things simpler and less confusing. I think that's the way to go. Forgot to say adios to Antonio there. I'm sure he headed over to the stream some time ago and I was busy watching all of this and didn't even notice. Sorry about that. Well. Here we are at the IB high again. Lower highs, lower lows. Context is essentially up, and how do you figure context around some sort of random weirdness? I don't really know. One thing I am sure about is when I feel like I don't know, I don't trade. I mean, the last thing to do is, start clicking the mouse, I think, in my opinion. For me to do. Let me put it that way. And now let's watch this play out, okay? Here was a 73.5. So let's see if we get down to 70.5 and it would be scaled. And then it is what it is. Yeah, take care there, my brother. Have yourself a good day. This is where I'd spend all day. Getting close to the area where I spent all day yesterday and finally got just frustrated and said, I'm going to go take a shower and have something to eat. And no sooner did my butt clear the door, and this thing took off to the top. We're a completely different scenario than we're in now, of course, but, So here's that short wouldn't have worked out, and this is how time frames can work. Lower highs, lower lows. Oh, let's zoom in a little bit on a different time frame. Ooh, higher lows, higher highs. Go to a monthly chart. Oh, here's the micro composite. Higher lows, higher highs forever. And if you want to really get frustrated, go back and look at the weekly or the monthly or whatever for the S&P. The only thing you should do is put a long on and go to bed. Wake up in 10 years and you've realized a lot of money. But that's not how we do it. That's not what we are. We're traders. And one of the facts or, important parts of being a trader is being a day trader, meaning that need to be flat every day. So that rules out swing trading, which is okay with me, but that is a reality. Back to the ETH high. So that would have been a pretty disappointing IB short, eh? IB failure. That would have been a stop plus right there. And frankly, I don't think that the IB statistics in terms of that trade are very applicable anymore with all this big disruption to the market. What they say about that is not me. What they say about that is that once the market has or the auction has a big disruption, then can be a considerable period of time where it's looking for balance, right? It's looking for fair value. And that's kind of, look what they're doing. They went zooming up here. Oh shit, what are we doing up here? Well, let's go down here. Does this look okay? I don't know. It might be a little low. Let's check up here. I guess that's how it works. For sure, that's how it worked on the floor, but those were people standing there doing this. That's, there are people doing this now and machines, but, there's not that interaction, and it's spread over. There might have been a couple hundred people on the floor, and, now there's millions of them, I guess. When I hear these numbers about the prop shops, it's phenomenal to me that there are so many people involved with this. If you just call it $50 a month, which is probably a more or less reasonable average between some of the high ones and some of the cheap ones. And one company is making $10 million a month. That's 2 million people combines for just that company. And there's more companies than I can count. I tell you, Patak really stumbled onto a gold mine when he figured this out. Hats off to that guy. Those are the people that I really admire. Not those of us on this side of the screen. It's those guys that are getting paid, money for nothing and the chicks for free, and selling dreams and making millions. That's the truth. That's a fact, Jack. To quote Stripes. Yeah, and I have no clue. Right now, we're just, we traded down, we've rallied up, and we're just kind of rotating we're rotating, right? In here. Around this higher two distributions, essentially, and we're just rotating around them, around the second one. We got cleared out of the first one with the world famous Trump stuff, or the tariff stuff, and the random risk that you certainly never know about. Now, little blondie gal there is going to be chit-chatting up a press conference here in a few minutes, so that's, who knows what that's going to do. Who knows what that's going to do? I'm fighting the urge to wander down the hall there and see how the shower's working. Let me see, speaking of how it's working, looks like we ran out of music here. What's next? I don't know. That piano thing was kind of a good idea, I think. I can remember that. How to find these, I don't know exactly. This is all this epidemic sound thing I'm trying to figure out. I'm not sure about lo-fi. It's kind of that, reminds me of trance or everybody doing ecstasy in Southern Africa. Trap noir. I don't know what that is either. I don't want to put something on and mosey off and have it be terrible, so. And there's a bunch more, but I don't know where they went. I've only just got this set up far enough to give it a whirl, and that's it. Let's hear what this thing sounds like. I have to put headset on and whatnot to monitor this, so stand by. Stand by for laid back lo-fi. frog. I'm not sure that frog is the right idea, but you never know. I monitor this on the stream as you are. I like the binaural stuff and more focus, but I haven't really, like I said, I just got this going yesterday night, so binaural. Oh, so here's something new. Well, it's not so bad, I guess. I'll leave it on for a while. If the music's too loud, too soft, or no good, drop something in the chat. Thumbs up, subscribe. That's basically what I'm in this for. And I like combat, or feedback in the chat. Of course, if you want to, send me lots of money, that's okay too. We won't turn that down. Man, oh man, what is this? This is what I was trying to do the other day when I entered into a trade quite by accident. And I'll tell you what I'm going to do right now. I was trying to put a trend line and I wanted to move the end of it. Made a mistake of having my mouse just on the right side of that line where the mouse turns into a dollar sign, and was suddenly in a trade. So in this case, what I'm going to do is I'm going to turn off both and go to dome only. And now clicking over here is not going to better not put me in a trade. What I was going to try to do was draw a couple of trend lines, and I'm really bad at this because I never do it. What we're doing is we're doing one of these, lower highs and higher lows, focusing in on a point, winding up, whatever you want to call it, spooling up, however you want to go. I'm still afraid to draw that line, so I'm not going to do it. Fortunately, when that happened in my trade plan specifically says flatten immediately without even thinking about it. And that's exactly what I did. Boom. And it turns out, and it didn't cost me a penny. It was in and out, same price, not so much as a penny. Well, a commission. But of course, in that particular instance, the trade went on to both targets plus, But that's a classic example of, had I not closed that per my plan, and had I let it run and taken those profits, that would have been a big negative reinforcement for me, because that would be positively reinforcing a negative action, if that's correct way to say it. My trade plan says if you make a mistake and enter, flatten immediately. And if you don't flatten immediately and it turns out to go in your favor, then your brain remembers that. So the next time, is it going to go my way this way? That's dangerous, I think. I don't need to draw those trend lines, I don't think. Quite a day, huh? Quite an interesting day we have here. This is about where I start getting a little bit tired and a little bit hungry and think, well, I've been standing here for 6 hours now. Maybe I should go take a little break. And that's exactly where I got pounded yesterday. Typically, that's not the case, but again, I remember yesterday because it was the trade I was looking for, and I missed it by 5 minutes. And I don't remember all the hundreds of times I toughed it out through the 12 to 1 hour, and it was a complete dud. That's an exact example of what I was talking about a minute ago with doing something wrong is in the terms of your trade plan, and having it work out in your favor is real negative reinforcement. It's a negative positive reinforcement. Is that true? Can that be true? Like a double negative? I don't know. Double negative is a positive, I think, isn't it? I don't remember any of that stuff anymore. You get the idea, right? Look at that. Trend line down, the trend line up, coming to a focal point. You would kind of think something's going to happen right along here sooner or later. And that doesn't mean anything, but putting in a definite zipper or barcode over here on the NASDAQ. Look at this. I used to love that analogy of FT71s is putting in a zipper, and it looks exactly like a zipper. And the younger squad nowadays calls him barcode. I think this is a bear flag, isn't it? Where you consolidate up, and then it in a downtrend you consolidate up, and then it drops. Isn't that a bear flag? I'm not much of a candlesticky kind of a person. I don't know all those things. Yeah. Maybe we all need to make a deal, right? I go take a shower and get something to eat, and you guys watch the market and trade, and then we split the profits. How's that sound? I'm sure somebody has thought about the scam. I guess it's a scam. I don't really actually know. I guess it would be kind of the reverse of a pump and dump. You know, a group of people get together and say, okay, it'd be like hedging, right? Or wash trading in a sense, I suppose, where you'd, half go one way and half go the half go long, half go short, and then whoever won, whichever way it went, everybody split up. But the problem with that, as with my understanding of hedging, obviously, if you're long and I'm short and the market goes one way or the other, one of us is losing at the same rate that one of us is winning. So that looks like zero to me. I understand that market makers do that, and that's their goal, is to be delta neutral, because they're making money on the spread and they're hedging off their risk to delta neutral. I think that's what you call it. But as for traders, now I can understand hedging risk to a certain degree. No, that doesn't make sense either. I was going to say something that I don't think I agree with. How a trader would do that, I don't know, because it seems to me that at some point in time you got to shut the loser off and let the winner go to make any money on it. Otherwise, you're going to be neutral the whole time. I know in options they can do that if you're selling premium, but you can only do it to a point where, and believe me, this could be a way wrong, okay? But I'm trying to figure out some of this option stuff. If you sell premium, then you can hedge to a point where, but you have to be able to flatten the minute you get to what's equal to the premium, right? Whichever loss you're taking. I think that's it. I don't know. If somebody can explain that to me, that'd be great. I've never grasped the concept of hedging. It always seemed to me to be, well, that's getting nowhere quick. If one trade is losing and one trade is winning, how am I getting somewhere? I understand, again, with the market makers that they're making orders and they're making the spread. But smarter boys than I am, I guess. So 74 to 77, if you got long down there on those taps, you just got scaled and then won, and now what? None of which would be attractive to me. The 70 to 77 was okay, of course, because as long as, I'm not doing Rod, and I'm sure I'm repeating myself, but at this point in my journey, risk neutral scale is phenomenal. And I can't begin to explain the relief, the psychological relief, the ability to think clearly, step back and make rational decisions about trade management that happens when that risk neutral scale comes off. Now I can still, I don't move my stops. I don't freak out. I don't do any of that other stuff until that happens, in the case that it doesn't happen and I never move my stops away, and we'll take a stop. Which is kind of something that I've been thinking about a lot, is at what point do you just let it come back in your face and take the stop? Or do you say, well, this is stupid, and move your stop up? Or kill the trade altogether? That's the next steps. Well, here we go, up and down and back and forth and around, right? So funny to me that the news comes out where they're closing in on an agreement about something, and everybody goes, yeah, up they go. I don't go that necessarily follow that principle. And we're in the 12-to-1 spot here now. Sorry about that. Hit the mic boom with my glass. Take care, Richard. I gotta look up at this chat more often. If you're passing through, click the like and subscribe would be cool. I start the stream every morning at 0800 Central Standard Time for the pre-market and analysis of the overnight and the pre-market and what we're likely to do on the open. The numbers that are coming out and a few other things. And then stream all day till 1500 Central Standard Time, which is a cash close. The reason for that is I have a commitment to take no trades off the stream. And so the stream needs to be up and running in case a stream or a setup develops. I first started out with, a couple hour stream and then realized when I was still standing here at the desks that, here comes a setup and I don't have the stream up. So that didn't take long to figure out what I needed to do there. Notice we've got 269 at 85 and another 240 at 242 at 86. Right here. This is that big blow off on the news or tweet or whatever you call it. At this stage, I am only vetting my IB trades, which are the IBC and the IBF, continuation and IB failure. So that's all I'm looking at for this time frame. I slap a line over here at the open of each session and try to keep the entire session in view. And then when I'm, closing in on an anticipated target or a place to interact with the market or engage with the market, then I can scroll in and do that. Now, this is Bookmap, by the way. These are the session statistics or session prices, updated live from my IRT. And if these levels would be helpful, drop something in the chat there and I'll be happy to hook you up. I provide these live to and free to a lot of people. So there's that. These flags here are the migrating VPOCs, and this is a perfect example of that. You see here is the RVPOC. This is the current location of the RTH session volume point of control. Volume point of control, again, is just the marker, the price at which the most contracts have traded so far in this session. Right over here. This is the RTH volume profile, and this is the full session of the Globex. Okay, the reason I flag these is obvious. Look to the left. Uh-oh, where did all these guys go? Well, they scrolled off the left of the screen. And therefore, I use these flags. These statistics are first driven by the open type, and then they are associated with the whichever particular price it is, 77.4% of the time. The statistics study looks back at 2,000 days. Of those 2,000 days, the days where we opened lower out of range, or higher out of range, I'm sorry, the overnight high was revisited 77.4 times. The overnight volume point of control was revisited 80.5 times, and so on. I do that every morning in the pre-market in depth and, with the study and all those kind of things. So wander back by. That'd be great. This is IRT. This is the E-mini, NASDAQ mini, E-mini market, micro composite and volume market profile. And then I also do one for the micros. And I push both the price levels for both micros and minis as also for these high and low volume nodes over here. So there you go. That's where we are so far. We're at 12:30 Central. These are all times on my charts, and that I refer to are Central Standard Time. So typically it's a time to kind of relax and readjust for me. And there is a trade called the 12-to-1 trade, which says that, first of all, if the market is directional, and that could be questionable today. We started out pretty rotational, balanced, and then, we're going to have a trade deal happen over here. So we are fairly well balanced, but with two primary distributions. Back to the 12-to-1 trade. It says that if we are directional, and if we put in a new high between 12 and 1, meaning take out this high and get up here someplace, that there is a high probability in the low 90s, which I do not have the study, so I shouldn't be quoting this, but hey, it's interesting. There's a high probability that we will exceed the 12-to-1 high or low at some point in the balance of the RTH trading session for that day. So there's that. There's one for you. At this moment, we don't have much meat on the bone. Our range requirement would be pretty tough. Mid, VWAP, Globex, or RTH, VWAP, Globex. Both POCs are right here, both the full session and the RTH. we've put in a new all-time high right there in the RTH session. Remember that we did have an all-time high put in last night, or in this previous ETH session, up here at 76.75. And they immediately showed them who's boss and ran it up. The RTH guys ran it up here. Had a lot of liquidity sitting out here, 262 and 246. Marked out here at these highs, which would suggest probably we're going to get up there. I guess I could have convinced myself that this was an IB continuation trade with this V reversal kind of a thing here, and then test down and up we go. Now, the problem with that is it doesn't meet my range requirement because there's no spot along here where we have an unobstructed path to the risk neutral scale. So that'll be my excuse for the day. It's the truth, but you know, that's why I took that hard and fast rule off or made it not a hard and fast rule, but still remaining in my trade plan. Is that if you stick to that, absolutely, you don't take any trades. Look at here. There hasn't been 3 points with no obstacles this whole way up. Now we're okay. Now we're up here and it's all right. But this, you know, all-time high breakout, that's ETH breakouts, really nothing. I don't trade breakouts. Breakout momentum kind of trades for me are FOMO. Typically, I've recognized that I'm chasing essentially. So I have an error code for those. I'm not saying that they're not a valid strategy. I'm just saying for myself. This is my trading journal, right? This V reversal right here and the subsequent test of the VPO of the IB high is working out sweet. Basically six handles up. So, which the all important one is the scale. Right there. And then helmet on, hat, you know, feet up, and away you go. And you're rooting for new highs. And using my previous demonstration for how time frames can affect you, here's lower highs, lower lows, higher highs, higher lows, and or you look at it even, you know, further out. Higher highs, higher lows. So there would be no place that you would be justifying a short, or higher lows, higher highs. This is micro composite, and this is looking back to 26th of June. No, it's all a matter of perspective and time frame. You have to know where you're going to operate, and I think that is dependent upon your risk and your risk appetite, your risk ability, account size, etc. Right? And then you have to look at harmonic rotations and ATR. If the ATR or the rotations are outside of your risk parameter for your account or your prop thing or whatever it is you're doing, or your account size, just, you know, even for your own account, then you gotta come in a little further, as Tom at T-Lab talks about them in Matryoshka dolls, you know, those nesting Russian dolls where you just keep getting smaller, 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 and pretty soon, and that's what you might have to do. In other words, you're looking at this time frame only and worrying about trading that, rather than trading this time frame or the monthly or whatever, you know. based on your account and your risk and all that stuff. It's all stuff that you need to analyze and understand prior to the trading day. You need to do these analyses and this thinking during your homework session, whenever you do that, at night, in the morning, whatever, but not during the live market. I don't believe you should ever change your trade plan during live market. It's not right. I don't think that's ends well, typically. Oh, let's see. What's Sir Bucket is busy chit-chatting, I'm pretty sure. And Trump is talking to... Trump pledges moves to stimulate AI use and exports. Okay. Pretty much, I think anything anybody wants to hear is what they're going to say. You know, we prohibit the sale of the most advanced AI chips to China and then turn around and give NVIDIA the license to export them. And now because we don't want them or their military or other countries in their military to have access to our technology and our AI. But out of this side of their mouths, they're going to do all that, pledge to do all that stuff. That's, you know, those kinds of things are tough. And what I suppose is that those kind of promises are going to come back to haunt somebody. But I think that the current administration in particular they're pretty used to and function well within this really short news cycle. And a lot of what they do is geared around that, you know. Misdirection to some degree. Like, look at this. Look over there. I don't know. I mean, I'm not to be political. I'm trying not to be political, but, you know, it's reality. I don't care if it's Democrat, Republican, whatever the other ones might be. You know, if you're a liar, a dickhead, or you steal something, that's what you are. It's got nothing to do with what party you belong to now, and a lot of them have changed. You know, Trump was a Democrat for a lot of his life and couldn't get on any tickets or anything, just as an example. Now he's a, you know, card-carrying Republican and stuff. So, yeah. I don't know. I'm not saying one way or the other, or one thing or the other. I hope the country comes out of it whole, you know. I have opinions about some of the stuff that's going on, and may or may not be shared by others, but also it's kind of like trading, you know. It's kind of like your perspective and your time frame. Pretty important. What's this pretty little gal over here? She's busy talking. She's pretty happy about life, and she should be. What's her name? Where is it? Levitt. Leave it. There you go. Married to a billionaire? Has given birth to, or whatever. They now have a child, baby. And he has adopted the role of Mr. Mom so that she can do this news thing for Trump, press secretary. I believe that, as I understand it, they met when she was, I didn't realize this, but she apparently ran for Congress, I guess. And he got brought in as, here we go for that new high, watch this. Got brought in for as a contributor. Billionaire. They got married, and I also found out it was kind of interesting, if you're working for a living, her salary as press secretary is $200,000 a year plus all the benefits that you can imagine. That's pretty cool. World is definitely spinning her way. Good for her and her family. I had never heard of any of these people before, but I'm not political and I don't follow that stuff. And obviously they are part of the machine, just like, who was the last one? Huckabee? Sarah Huckabee, I think, who was from Arkansas and left that and went right over there and got elected as governor with the machine behind her. So I guess that's part of one of the ladders. One of the rungs in the ladder can be the press thing there, I guess. Here we go for new all-time highs, 12-1, baby. Let's see if that comes to pass now. I'm sort of interested in that. And I'm sort of disappointed that I didn't take the IB continuation right here. Bad boy. I would suppose that's based on some sort of news about what she's just said, or perhaps this AI thing that Trump is saying. He's at some AI conference, I guess, or something. So here we are. And this is obviously not the time to be making any kind of a trade long. And I wouldn't suggest a trade short either, looking at the price action. I have again missed an IB continuation trade. Now what I need to start doing is thinking in terms of asymmetrical trades and more or less eating my own dog food about statistics, right? So if you get long right here, you can have an asymmetrical trade just under this spike, or get long in the spike, just under that spike. Doesn't have to be the full 3 points, but it's asymmetrical relationship between the potential long and the short and the risk. And accept the fact of, eat my own dog food in that, when a trade sets up and you have a valid vetted trade, you take that, and then the law of large numbers works out for you. So here is a trade that I have that I'm in the process of vetting live now, besides the back testing. And I should have taken that right there. Or if you really want to be extra cautious, but there's two kinds of things. You can have information risk or confirmation risk, right? Or confirmation risk. So if you want confirmation and you enter up here, where's your risk? You added more risk. If you, enter here, for example, with your stop just below it, saying, okay, well, if it goes there, it's wrong. I'm out. Then you've eaten your own dog food and away you go, and you would have just made both targets. And we have just put in the 12-1 criteria in that we have, not by much yet, but a tick or two, put in a new high between 12 and 1. So, will that statistic come to pass? That's one to think about, isn't it? Disappointing for me. This is 2 days in a row I missed that trade during the lunch hour, during the 12 o'clock period, which is kind of a time I'm real apprehensive about trading. The volume usually drops. Of course, the minute I say that, it hasn't changed much. We're still around 98 at this point. 98% is about where we've been. About 3 points ATR at this point. I got to figure out how to use these rotations right and in some meaningful manner that I can use. And right now, I don't know what that is. Look at the S&P, or the SPOOs here, or SPX is right down, traded right down to that open level. And this is, again, this is just the ES, and this is open interest. So volume's a little bit off up here. 757,000 contracts. We are plus 0.58% up in the in the ES. Disappointing in myself. That's 2 days in a row now. I've got to tighten this up some more. I just need a couple of trades here, and I'm over my I'm over a target that I want to hit. But I'm extremely cautious about it. Obviously, too much so. And I should put a sign around here somewhere. An old trader's quote that confirmations for Catholics. You know, if you're a trader, you take them and you go. You take the trade and go. And that's exactly what this is. This is confirmation risk, right? And this is information risk. You're risking you don't have any information, but you've given yourself a much better price location, entry location. You've given yourself a much worse entry location or this confirmation, what appears to be confirmation in the direction you were imagining the trade to go. What is all this? Look at this delta happening up here. What are these guys doing? Well, there's 57. There's 106. We delta'd out at $1.74. We just keep ticking higher. We're into these twos now. We got through 85 and we're up into 86. Just what we need is more all-time highs, I guess. Wait till they have the report for... Wait till the... Oh, we didn't like that. Somebody said something they didn't like. Oh, wait a minute. Nope, bond auction's over. Okay. Notes, bonds, whatever, is always at 12, not 12. So somebody said something. Now the question is, are we gonna rally up there? Something happened right here that they don't like at all. Okay, Navarro comes out. He's gonna be careful, or Trump is gonna spank his ass. Well, all of them are talking about how great this is gonna be, and guess who says it's not? Well, yes. Here we go. Here we go. Well, here we are. Rod had a pretty funny comment. Oh, it sounds like Navarro didn't get to fill his order. Bring the bus back. Now he's jumped on and he's okay. Let's go up. No, just kidding. It's just, it's, if it wasn't so serious and, our country and the economy and the world, it would be really funny. And it's something like you'd expect in some Peter Sellers movie or something like The Mouse That Roared, or you know what I mean? Some kind of thing that's beyond a third world deal. It's just the funniest thing. I mean, not funny, haha, but funny, wow. Crazy funny. But I'll tell you that this V reversal right here, based on that little tidbit from Navarro, was quite the perfect one. Now, Rod and company are taking that frequently. And I have done. I'm religiously only taking the IB trades for this few, period of time until I'm comfortable that I have a properly vetted statistics and confident in that. This is the V trade. There's been several VPOC migrations. And what I'll do next is, after this is vetted and in the bag, that will be part of my game plan or my trade book or whatever you want to call it, playbook or whatever. Use whatever analogy you want, sports or, something. And then do the next one. And once you have 2 or 3, that's about all you need. The idea being, of course, that you, or at least my thinking is that I will try to develop and vet setups and trades for different market environments. Then you kind of have a trade plan for different environments to do. I think that is the kind of the accepted consensus for the way to approach this. Or I don't know whether accepted consensus or not, but that's the way I'm going to approach it. Let me put it that way. If you're passing through the stream, smack that thumbs up and drop something in the chat. Say hello or make a comment or do something. That'd be cool. Of course, there's always the subscribe. That's nice. And, I can put a link. I'll put a link in the description where you can send me money. That would be nice. Maybe not. Okay, probably not. I don't know that. You never know. I remember once a long time ago, and I'm talking about 50 years ago, some guy put an ad back in the days when people had want ads and newspapers. If any of you are old enough to remember that, there was no internet. There was no any of this stuff. And a guy put an ad in a couple of newspapers, in bigger cities, let's say. And it's been so long, I don't remember all the details. But the ad said, "Rush $5 offer ends Saturday," whatever the hell, a week or so from whenever the paper was a Sunday paper, offer ends next Sunday or something, the Sunday, the whatever, 1 week away. And he got like $50,000 or $60,000. And they tried to arrest him, and then he said, "Hey, what did I didn't promise anybody anything. I said, send $5. And they did. There is I guess that's the old P.T. Barnum, there's a sucker born every minute and or something, whatever all of those things, but yeah, it's incredible. It's truly incredible. And those were the days when you had none of this online or this and that. You had to put $50 in an envelope and mail the damn thing. You know what I mean? It wasn't quite as slick and, my father's a prince from Nigeria or any of that kind of thing. It was just an ad in a paper and a P.O. box or something. I think in those days you used to be able to have a box at the newspaper, like box 18 at the Tribune or something like that, and then all the mail that came as a result of that ad would go there, something like that. I remember a long time ago. Look at this V reversal, man. I've taken a few of those and they've worked out well for me as also. And now you would not be approaching T2 yet, but you would certainly be scaled. And then that's where I would have to start arguing with myself about how do I manage that trade. That's why I don't take them, because I am not vetting these sharp V reversal trades now. I'm vetting the IBs. I did miss this one. I would consider that a missed trade and a problem on my part. But this one, no, and the others, no. I think I have a stigma about the time of day. I am pretty focused on, or pretty positive about the RTH1 period. RTH, 12 o'clock is obviously in RTH2. It's basically that I think there's 105 or 405 or 407, whatever minutes in the trading day in the RTH session, and divide by 3. That's where you go. That's where this came from. And it's strictly up to however you want to do it. Up to you. Oh, there is the 12-to-1 stat satisfied. Well, that's a real disappointment. I'm busy being sarcastic over here and doing some typing at the stat deck, and here's the 12-to-1 stat, and we're heading for higher ground. Again, it's got nothing to do with my IB, the vetting my IB trades, but had I not missed this IB setup, I would now be well taken out or scaled or whatever you want to call it with no heat. Would have been kind of nerve-wracking right here, huh? But in reality, I mean, the fact remains, no heat. No heat, and if you or I were managing the trade and we had not gotten the T2 out here yet, you could keep sneaking it up over these liquidities, right? There's 400, 247, 250, and they're stacking up here. Obviously now, there's, we're at all-time highs, so there's no nothing above us. There's no, we've not traded up here yet. That doesn't mean there's not stops living up there and orders. There are, obviously, right over here. But you have to, I think it's important to recognize something. And that is, back to my zero-sum game discussion a few minutes ago. Futures are a zero-sum game. For every buyer, there's a seller. No such thing as too many sellers or more sellers than buyers, okay? What does that mean, really? Well, to me, it means that for every one of these guys that are so excited about buying this thing up, and remember that these are probably not stops being hit up here because we haven't been up here yet, or hadn't been for a while. It's all new country, right? For all of these people that are buying, what's happening on the other side of that trade? Somebody's selling to them. How is that somebody going to profit? The market goes up to go down and goes down to go up. And that's exactly why. Somebody's on the other side of all of those trades. And in my opinion, and not to be a conspiracy theorist, but in my opinion, it's the higher time frame. And I mean, unless tell somebody presents a good argument to me why this is not true, and I'm completely would really appreciate that. If I'm wrong, I would love to find out why. But until that time, all of these guys that got long up here, two things are happening. Number one, their stops are all down here somewhere under the mid and VWAP, right? At least under these swing lows. And this higher time frame guy, sell. Ooh, sell. Buy. Ooh, sell. Ooh, God, we're going to the moon, Alice. And then what's going to happen? The rug pull from hell. And when it comes zooming down through here and starts taking out all these stops, it starts picking up momentum, right? Because a lot of these, if these are retail guys, their stops here, their stops here, their stops here. You know what I mean? We're all different time frames, and we have our stops and our trade placement, our trade locations are all different. But that's how the market works. Until somebody explains to me that differently, that's my story, and I'm sticking to it. Nobody has yet, and it's been a long time. On the other side of the coin, there's people who have traded and know about trading, and like Tom and people like that. The market goes up to go down and goes down to go up. What does that mean, really? Stop and think about that. Now, if it were the stock market and there's a big pool of, bucket of Tesla stock sitting someplace, and I want to buy, that's buying out of that liquidity pool. Nobody's on the other side of that. That's why the equities markets in general continue to trend up. Nobody's on the other side of those looking for a profit in the longer time, or the higher time frame, that needs a profit. In order for these guys to unwind, even the options guys, they got to unwind at some point. If I'm an options guy and I sold somebody a bunch of futures up here, how am I going to unwind that? I got to buy it back lower. I'm not going to buy it back higher and lose money, I don't think. Makes sense to me. I don't think it's that complicated. I think it can actually be that simple and that basic. Again, if you know better than that, or you know something, or jump into the chat and say, bring it up or whatever. I'd love to know. And having said all of that, we've had our 12-to-1 trade. Our stat's been hit. We have Curly, Larry, and Mo are going crazy over here. And boy, this damn thing is running, isn't it? And the NQ is following in hot pursuit. So, yeah. All-time highs, baby. This time they're making damn sure it's not going to get taken out again in the ETH, I suppose. I don't know. We're now looking at 6,400s up here pretty quick. That century figure, that's going to be a big deal. Trump will be happy. The administration will be happy that the stock market thinks everything's great. Not so sure what the bond market thinks about it, but but, you know, and I'm pretty disappointed that I didn't get engaged somewhere along the line, even though it wasn't part of my plan for the day and for this period of time with the IB statistics being vetted. Would it be nice to have, you know, locked one in? Had I done that yesterday and again today, I'd be over my target. That would be nice. But it wouldn't have been following my plan. So there I am, stuck in the middle. Happening on this lo-fi thing or music thing or whatever, I keep forgetting about it. Not so bad. Well, Didn't take them long to correct that Navarro thing, though. New highs, new highs. Now they're just, now it's just irrational exuberance. They're just running away with it. And as I was saying a few minutes ago, I'm sure somebody's just happy to sell them all they want. Maybe they're going to get 64s. Never know. NASDAQ could hit the 23,400s, I guess. One thing for sure is I wouldn't recommend shorting this thing anytime soon. Or trading the hell out of it. Quite an amazing move here. These are the kind of times where, you know, FOMO or all of those things can come back and really bite you. Because the human is, you know, our years of evolution and our monkey mind is developed to rationalize. Remember, oh, look at us go here now. Somebody else said something else new. Wow. Funny, huh? Remember that there's nothing up here. There's no history up here whatsoever. This is all new highs, all new territory. So it's not like we're revisiting anything or taking out liquidity or doing that kind of stuff. These guys have never traded up here before, and they've got their orders sitting up here waiting for dorks to come get them. And these guys can't get enough. They keep jumping across. The way the market goes up is these guys jump across and lift. The way the market goes down, these guys don't jump across and lift. These guys start coming down and hitting the bid. That's how it works in the futures market. What is this goofy looking thing here? We got the devil's fork up here or what? I'm afraid to go look at what this is. Who forgot to get their shorts in or their order in, you know, one of them. That was Rod's comment on their last Navarro thing was, well, it looks like he forgot to get his order filled and, hey, bring the bus back for me. That's probably more true than we would care to imagine, or that I would care to imagine. Trump trade advisor, we're focused on rare earth supply outside China. Okay, great. So happy for you. Trump has decided that he is basically going to rule the country by executive order, or, you know, like a king or whatever. They figured that one out, which is something I didn't know, actually, that if he makes up a reason to state of emergency, that he can make executive orders about trade and things. I mean, a president can. That's completely in the. That's the law. So they just figured out how to exploit that in a way that had not ever been done before. And in my opinion, I hope never will be done again, because I don't think it's been very good for the country. But that's just me. And clearly not. The majority of people don't agree with that, apparently. I bet some of the other presidents in the past that wanted to do this same kind of thing secretly are kicking themselves for not having thought of this, you know. It's a national emergency. The fentanyl story is a national emergency. And so that's what justifies doing this. Fentanyl, the drug that was invented and produced in America by Skek family or whatever it's called, and is relatively recent on the scene in the drug world, I believe, compared to like weed and cocaine and heroin. How about heroin? How long has that been going around and killing people? I do think fentanyl is a particularly terrible drug. I don't know much about it, but from what I've heard is pretty bad news. Whether it justifies, rounding up people on the street and flying them to a random third world country they've never been to before and imprisoning them for an indeterminate, I guess, the rest of their life. I'm not sure how that works with the fentanyl thing, but I guess there's a way around it. If you're, you're a lawyer, I guess you can get around anything if you're think that way. Well. I wouldn't have any idea what we're going to do here, except it's 1:30. We're going to be rounding the curve here for the power hour pretty quick. I might have to go out and forage up a piece of toast or something here. Hold on. So everything seems to be working okay. Right up to the weekly expected move. That's pretty interesting. I put these levels were in the system last night at about right after the RTH Open, and will be. So. Well, if this thing gets much higher, these guys are going to start getting a nosebleed up here. So we'll see what happens. But where are we here? We have 20 minutes to the power hour. We did satisfy the 12 to 1 stat. We satisfied the IB high, or the IB stat, obviously. And if they keep dorking around up here, they're going to get a new all-time high over 64. So that would be pretty miraculous. Oh, and they did take out the overnight all-time high, which fully expected. Well, there's a lot of pretty crazy looking price action going on here. These little spikes here, I'm assuming that all of this stuff is attributed to random speakers. The trade that I'm working on, or the trades that I am working on vetting in this current period of time are the IB trades, of which there are two. IB continuation, which this is a classic example, and I missed. We traded up through the IB. We came down, test through the IB high, find nothing down here. We come back up. Could either have gotten it here for a more of an information risk, or up here for more of a confirmation risk. Either way. And then up she goes. This Navarro, hey, what about me? I didn't get my order filled yet. Spike here, but aside from that, this would have been a smooth side, right? Had he not jumped in there quickly. And it still didn't even slow the market down much. That's a mistrade for me. None of these other situations, like this, the V reversal, or the migrating VPOCs, or any of that stuff, are on my trade plan, because I'm vetting these the IB trades. But disappointed about this one. And basically, not to make excuses, but this threw me off. This was the big, and we got a deal, and then down they came. It started getting normal again here, and I didn't notice that in time. The price action normalized to some degree. Oh, here we are, and we're gonna roll into power hour here in another about more or less 12 or 13 minutes. Not that that really means anything, but now, what power hour means for sure is that we have 1 hour left in the stream, because typically I wind it down at the cash close at 1500 with a little bit of sometimes a little bit of a recap or not, depending on how I feel. Quite a day. Quite a day. Amazing that the market is so primed to take off that a comment like, we're closing in on a deal, is enough to make that happen. Enough to make this happen. And then we continue up, and Navarro jumps in. Well, don't take that trade deal with a grain of salt. And I guess they decided that they were on a salt-free diet. I don't know, Back to the top. Beats the hell out of me. It's kind of like, I think sometimes you have to remember that in order to understand a psychotic or psychopath, you need to be psychotic. And not that anybody in this associated with this market is, but that was an example. If you're going to understand this kind of irrational, doesn't make a lot of sense really compared to what everybody else thinks, decisions or actions, you kind of have to think along those same lines to understand it. Otherwise, you need to do what I'm trying to do, which is focus in on trades that I know are vetted and continue to vet them myself. And so far, I've missed a couple in this last couple of days because it's been kind of random and weird. But I've, slowly been ticking up one at a time. And now I have 2 more. If I get 2 more positive trades in that, I think I'll be right up pretty close to my one of my self-imposed targets, milestones, shall we say, which will be nice. And I'm just trying to do that with, control and anticipate. The reason I'm picking on exactly this IB trades is twofold. I want to completely vet and have absolute confidence in the IB trades. There's only two. And it eliminates a lot of the anticipation and the nervousness or the trepidation, whatever you want to call it, about trading, because I'm not even thinking about any trades along there. Well, yeah, oops, sorry. Wrong. Wrong. Until the IB doesn't set until 9:30. So I'm not looking for a trade until we get to 9:30. Now my ears perk up and I'm on alert. And what do we do here? Well, we don't get down. We got down just before 9:30. This is 9, remember. We don't have any trades. We're right in the middle, just, stuck in the middle again. And then this news comes out, and that takes out the IB. That satisfies the IB stat right there. It's past 9:30. We took out the IB high. But that's a real random market auction disruption. So what they need to rebalance and reestablish what they think value is. They, meaning the market. We come back down through it. Don't see any action that we want to get lower than the overnight volume point of control. This mid wasn't here, of course, because we didn't have all this upside to us. Remember that we're looking back in history. This is where I did miss an opportunity, because this is pretty much normal market action, bar trade. We consolidate, breakout, retest, same. And then we drop down through the open, the IB high, don't find any sellers below us, come back up through, and this is where the trade should have been put on right here for the IB continuation per my trade plan and my definition of the IB trade, IB continuation trade. At that point, I was a little bit apprehensive. One of the reasons being that the IB continuation is typically a trade in a directional market. And at that point, none of this had been put in. So what we had was just these rotations down below us here. A little bit of a question, because a rotational market is indicative of an IB failure trade, because it's essentially mean reversion. But after all the nonsense with the number and the report and all that stuff, not taking this this IB continuation down here is a mistake on my part. A missed trade on my part, and the results are like everything with the rearview mirror. The results are crystal clear. The thing about the stream is that those things are very definitely recorded, and so there's complete 100% transparency and accountability here. So there's that. And 6 minutes to the power hour. Well, nice to see some people flowing through here. Smash the like, the what do you call it, thumbs up, and subscribe. That would be great. Also, if you're interested, I start the stream every morning at 8 o'clock with a review of the numbers and, description about the stream, whatever the usual disclaimers and stuff. And then the analysis of the numbers and reports for the day, earnings reports, whatever. Look at the pre-market, where we were last night, where we're going to likely go today in the day. Get prepared for the how to set up the risk neutral brackets and the micro composite profile and micro composite numbers and charts, and then the open, and away we go every day until about 1500 at the cash close. And then, I guess it shouldn't be a surprise, but 9,400 is just above us up here. Excuse me. Two and change till the power hour. Be interesting to see the market on close orders. Yesterday was just like a joke. I think it was the lowest I've ever seen. Last Wednesday or Thursday or Friday was 3,200,000,000 and change million sell side for the S&P 500. And I think yesterday was like 100 million or something ridiculous. It was crazy. I've never seen such high numbers as the other day and such low numbers as yesterday. Market on close orders being released at 1450 every day. Generally, usually used to be whatever, pick one, pick an adjective that you want to use, or whatever that word would be, have an effect on the market, and you'd see a pretty, sometimes very substantial reaction to that. Lately, it's just like the only thing they seem to be worrying about is what some goofball has to tweet about, whoever that may be. Pretty scary. And here we are, ladies and gentlemen, 1 minute and counting to the world famous power hour. Or I guess I'm old enough to say boys and girls. I bet I'm the oldest one in the T lab and probably on this stream. So I have I've got the permission, the horsepower, and the whatever else to say that. Not that that's anything to brag about, but beggars can't be choosers, eh? All right. Well, great to see some folks flowing through here. That's super. Don't be bashful now. Smash some likes. Smash some, what do you call it? Subscribes. You can tell I'm a real professional influencer, huh? Yeah, this is my personal stream. If you tune in it starts every morning at 8, so, I'm considering doing a ETH, an abbreviated stream in the evenings, because I do watch the markets until about 9:30 or 10. This is all Central Standard Time, my charts and my narration. But every morning in the I go through the numbers and review the pre-market and the ETH session and where we're going to go, what the expectation is for the opening trade and in the direction and stuff like that, and then set the charts in the micro composite book map, the risk neutral brackets and trading system up, and then we open. And the commitment is to take no trades off the stream, which provides transparency and accountability, of course, complete transparency and accountability. And each stream, unfortunately, because of that, each stream lasts for about 7 hours, because I start at 8 in the morning and I typically close it off about 1500 in the afternoon, right about the cash close. But there is no, that can eliminate any possibility of, all of the shenanigans that I understand people get up to. I don't know why, but I guess they do. Rigging stuff up and using 2 accounts and doing this and doing that. It's all right here and it's all transparent. Now, the reason that I do it, that I stream it to YouTube, another reason I stream it to YouTube is that besides transparency, accountability, and all those things, I can review it on other devices. So I don't, I've been standing here for 7-8 hours anyhow. I don't need to be standing here some more to review the stream. I can do it on my phone or, fall asleep to listen to myself talk or whatever it is. And that's another reason for it. And I believe it's probably a more permanent record. There is a recording and everything locally, of course, because that's how OBS works. But yeah, so there you go. So welcome. It's encouraging to see. Be nice. It's nice to get feedback. Antonio, GA, and Richard, and some other people that come in and feedback a little bit. It's nice. Trading can be a lonely sport, right? If you're not, and if you have some like-minded folks that you have something in common with, which obviously I would suppose, if you're into horseback riding, you're probably not over here looking or Googling about this. So, that gives, it seems to me that would be a common denominator. And we're in the power hour. By the way, these just quick trip around the horn here. This is book map. The way I do this lately is, I'm going to show you, I put a vertical marker at the beginning of each session. And I try to can't quite do it here with that, but I try to keep the entire session visible until I'm ready to focus in on an expected setup and trade location. And then I can zoom in, of course. There are no indicators on my book map or my charting on my IRT. There is a mid for the RTH. There's a VWAP and a Globex VWAP and an RTH VWAP. There's an IB low and an IB high. Stands for initial balance. Is nothing complicated or spooky. It is they simply mark the high and low of the first 1 hour of the RTH trading session. That's all there is to that. The POCs are also not mysterious or magical. They are just the price at which the most contracts have traded so far in the session, and that's all they are. let's say right here we're at 12,510. The minute one of these prices says 12,511, that yellow line's going to move up there. That's all there is to that. So it's real straightforward and real easy to understand, but it makes sense, and it's a process that you can follow that's logical and based on data and math. Hard to argue with those, huh? These are the low and high volume nodes, which are pushed automatically from Bookmap or to Bookmap from IRT. These are the session prices, equally pushed from IRT to Bookmap and continue through the day. And I share these with anybody that can use them if they need. If you would like to have a link for these prices that you can put in your cloud notes or wherever it might work, I'm happy to share that. No problem. Just put something in the chat. I do with lots of people in different places, the T-Lab and Static and stuff. This is the high time frame or the micro composite column where I manually enter these things. Here was the micro, the all-time high yesterday, and then the ETH went up here, and here's the ETH back a ways, which is now all off the table. Well, now the new all-time high will now be up here in the RTH session. This is a previous one, and there was a gap. This is the gap high from today. There's our open is this little guy right there, and the gap low is down below us. I enter those manually. Now, this is the volume profile for the RTH session and the volume profile for the VWAP or for the full session or the Globex. This is my IRT charting. This is a Renko chart for the ES Mini. Renko for the NQ Mini. The micro composite daily bars in the RTH session only for the ES. And this is the ES market profile. These are the price levels, which are pushed directly to Bookmap from here, as are these red and green lines, which come over there as the high and low volume nodes. They are for the the current micro composite volume profile. And the way I do these is wherever price overlaps, I continue to draw this volume profile around them. Excuse me. And in so doing, then it makes this volume profile and gives us a micro composite VPOC and high and low volume nodes and all that stuff. And I do the same for the micros as the minis. There you are. Now you're up to speed. And there's, a lot more to it. But I also, those statistics come for these, the probability statistics here that I mentioned come from IRT, from a study in IRT. There you go. So here we are. We're stock up in the power hour. And I would have no idea what these jokers are going to... It would not surprise me at all for some random thing to be said or tweet or something. And zoom, jump up over into the 64th. That would not surprise me a bit. We're already up here to 93, right? So 7 more handles is not really such a surprising amount to get up here to this. We've already got liquidity laying up here, right? 249, 257 at 64, 249 at the quarter. So none of that would be too surprising. And when we close, these will be stripped out. The flag will be input for the VPOC at close. I'll move the all-time high up here to the all-time high and put the POC in and get all ready for the ETH Open and tomorrow's trade. The way I do my Bookmap is I it starts Sunday night and it runs straight through Monday at 1600, and then that's recording, and then I shut Bookmap down. That ends that recording, so I have each full session, ETH and RTH, recorded back for, I don't know, a couple years or something. And I haven't looked, to be honest with you, but I know more than a year. And IRT, on the other hand, starts, I booted up at Sunday afternoon, evening before the ETH session, and it runs nonstop through Friday at 1600. I change between the RTH and the full session, and these prices continue to push, and et cetera, et cetera. So that's how my systems work. And then each weekend I, shut everything down, check for updates, restart everything. I keep my Windows update thing paused for 7 days. I do that each Sunday. And then on Saturday, I unpause it and, do all that. So I'm not standing here in the middle of something and have the unpleasant experience of, we're restarting your computer for you now, which is not that much fun. Been there, done that before. Somebody said that happened to him just the other day. I was amazed at, I haven't thought about that in a long time, but yeah, it can happen, I guess. That's about all I know. That's my setup. Those are my scheduled hours. This is what we've got going on. I missed this IBC here, which just thoroughly pisses me off. And yeah, we are. It's hot. It's sunny. 35°C right now. If you're a Celsius person, which is pretty damn hot. By golly. Now, this is kind of alarming right here, huh? You see the 12,029 contracts up here at 89.75? Well, our POC is right over here at 12.5. So they've only got to get about 400 more contracts traded out here, and this POC is going to immediately jump up there. That's a migrating VPOC, and that will be migrating to the top, all-time highs, signaling all these institutional traders are doing blow or something. So that'll be something to watch out for. And that's how complicated it is. It's just math and numbers. That's why I have the numbers turned on. A lot of people, you'll notice, don't, but I know when we've got incoming VPOC migration, and that's something that can be interesting. That is actually a trade set up by Tom and lots of folks. I'm not one I'm betting at this moment, but So they don't have far to go up there. I would say that the chances of that migrating north is extremely good between now and 1500. Especially if the market on close orders amount to anything. See if I can find those MOCs back here. Gosh darn it. I get that backwards all the time. Sorry, I'm not a internet wizard here. There you are. This is what the MOC orders look like, and they'll be on, I get them, pick them up off of Financial Juice. So this is market on close and balance. This is 175 million sell side in the S&P 500. This is from yesterday. You see my timestamp. 35 million, NASDAQ 100 sell side. Dow 1 million, Dow 31 million sell side, and Mag 7 is plus 44 million on the buy side. Now, if I was real clever here, I might be able to find, the one I was talking about. I'm just kind of having fun here. Nah, when would that have been? Monday? Yeah, there you go. As opposed to last Thursday, 3,251,000,000 sell side, 649 million sell side NASDAQ 100, 1,064,000,000 sell side Dow 30, and Mag 7 is sell side 338 million, compared to 1,175,000,000, 3 billion. Imagine that. Do that if you're sitting there wondering what to do next with yourself. Oh, there was our VPOC migration shift. Did you catch that? Both of them too. There we are. So I was right as rain. Isn't it cute how I'm right? Being right has got nothing to do with it. And if you worried about being right or wrong in trading, you're in big trouble. Because you anticipate what's going to happen, and I know I've probably gone through this before today, at least one time. The outcome of the next trade is 50-50. It's a coin flip. There can be many more heads in a row than there are tails, depending on the random distribution of the samples and the length of the sample size of the data set, But, and again, here, predict. No, I didn't predict. Go back in the stream 20 minutes and you're going to see exactly what I said. Uh-oh, we're at 12.5 down here and we're at 12,010 up here. All they've got to get is about 400 contracts, and this VPOC is going to migrate north up to this level right here. Having nothing to do with guessing, wishing, predicting, anything, or being right. Simply a statement of fact. Here was the price where our POC was and the volume. We were within a couple or 400 or something of that up here. And so it was pretty likely, and we were trading up here. 1 and 1 is 2, right? So if we're trading up here and very little more volume is required to get the VPOC migration to shift up there, the definition of which is, again, only the price at which the most contracts have traded so far in the session, period. That's the way to approach the market, in my opinion. Logically, calmly, not whipping and spurring or going after it like you're killing snakes. There you go. Now there's a high likelihood. The problem that we are is we're now at 1424, right? So we've got about 35 minutes to the close. And that's the cash close. Don't forget that the market will continue sputtering along until about 1600, and then it officially closes completely for the books and the justification, whatever they do, and then it reopens again at 1700 for the ETH session. One thing that I've noticed that I always am interested to watch for: what has the day been? Well, it's pretty obviously been up. Context of today has been up pretty much all day. And it looks like we're going to close on our highs, and the VPOC has just migrated up here. What is the VPOC? That is the point at which the most contracts have traded in the session. What does that mean? That means that's the price that most of the traders so far find the most fair or the most equitable, or let's say, are the most willing to trade. Sellers are willing to sell and buyers are willing to buy it up here. What's that say to you? Well, they're looking for higher ground, I'd say. Now, we didn't have much migration all day. You see this? But now we do. And I have noticed, and this would be interesting for you perhaps, assuming we close up here and nothing drastic happens, or here or higher, watch what happens in the ETH. Typically, we'll have a little pullback to take some profit, load the boat, get some ammo, and then they continue on in the direction of this migration and close up here at the highs. That's not a prediction. Again, it's just an observation, and it's something that I will be watching for just to see. I'm not saying that's what's going to happen, but I've noticed that, on more than one occasion. Whoa. Let's see now. What else am I forgetting to do or say or something? Tomorrow's news. This is bigger. Oh, I know another thing that's going on. Don't forget that tonight. Don't forget that tonight, earnings reports for Alphabets. That's the A and B. That's Google, Tesla, and then, a buttload of others. But cut to the chase of who matters here. So here are the, again, the investing.com and Financial Juice that I use are both free. You can pay for them, I'm sure, and get like real time or delayed, non-delayed or some crap. I don't know. But anyway, and that's what I use. So, and this is where we'll pick up the market on close orders in a minute. Here's the FX options expirations over here. Here are the bond auctions. Now, Google is going to report at 1500. Tesla is going to report at 1505. Then we've got the Google's earning call at 30, and Trump is going to be, trying to upstage everybody over here talking at 1600. Tesla earnings call at 1630. And at 1730, we got the Japanese manufacturing PMI flash number. Sometimes for me, those are easier to read over here, and you also see the numbers immediately, much clearer, I think. And this is where I get the economic calendar. Home sales we had, crude inventories, a big build. Drawdown actually. So and something else you can do here is we'll see. Let's look at tomorrow. So we've got jobless claims, S&P manufacturing. Ooh, that's going to be a big one. PMI and new home sales, building permits, jobless claims, S&P manufacturing, and new home sales. One of them is at 7:30, 8:45. 9. Going to be a busy lead up to the open, and then 30 minutes or so after the open. And if you want to see tomorrow's earnings, Thursday's earnings are right there. What have we got here? Intel. Ooh, Intel. NASDAQ, our favorite. These are filtered. If you'll notice, it's not alphabetical. These are filtered by market cap. You can do whatever you want to do, but that's the way it is. Blackstone, Honeywell, Union Pacific, Intel. What I'm looking for over here is the big N word. NVIDIA go. Friday, nothing. Monday. Lights. Mondays are usually lights, if anything at all. Boeing, Starbucks. Come on, NVIDIA, where'd you go? They got to be the top of the list wherever they are. Microsoft on Wednesday. Meta on Wednesday. Qualcomm. Wow, I didn't realize Microsoft was damn near double the market cap of Meta. I never realized that. ARM. I think they're toying with, look at the earnings. Jesus, look at the earnings next Wednesday, the 30th. Wow. Wow. Okay, so remember, free, huh? And free. Financial Juice and investing.com. All right. And we had the world famous VPOC migration. And I missed the VPOC or the IB continuation trade that I've been standing here waiting for all day. And I'm pissed. That's about all I can say at this point. We're going to round the curve. Oh, we rounded the curve already. We're in the final home stretch here. So remember, we're going to get our market on close orders at 1450. This is 1431. For those of you children that don't know how to tell that time, this is 2:30 p.m. and the market on close orders are at 2:50 p.m. The cash market closes at 3 p.m. or 1500. I just am so used to doing it the other way that it's you see that it's on my book map, it's on my chart and computers. It's that's how I tell time. And I also go day, month, and date and year on my, in case that screws anybody up. I lived out of the country for most of my adult life. So I got kind of used to doing it the way the majority of the world does. Now we need to see something, probably, don't I? What do I need to see here? Just a quick run through the market on close. We talked about that. The risk neutral setup is real simple. The risk neutral package and setup is real simple. I explain it in pretty much detail every morning when I set it up, but here is an example. I use multi-brackets. If you wanted to do practice trading or replay trading in Bookmap, you can trade exactly the same idea and the same functionality, records your trades, puts all the lines on the chart, does everything just like the live, but you use multi-bracket sim. So there's that. This is the risk neutral concept. You must trade even numbers of contracts. The stop for the entire package is at one location, and you can figure this one out, what you're going to put it at yourself. You need to do that based on your account, your risk tolerance, all those things. The market, ATR, harmonic rotations, volatility. And then the first take profit risk neutral scale is for the same number of ticks as the stop, but of course in the other direction, positive, and for half of the package. So it's a 2-lot package, is a 12-tick stop. We have one contract take profit at 12 ticks positive. Then there's a runner. If you do 4 contracts, guess what? 4 contracts, 12 tick stop in my case. 2 contracts, half the package for the same tick space as the stop loss, but positive. This is a loss, this is positive. And the reason, what's handy about this setup and Bookmap is you don't have to have one setup for short, one setup for long. It's smart enough to know if I go long, this is going to be 12 ticks below where I entered, and this is going to be 12 ticks above where my entry, or the other way around if it's a short. Okay. Now, in my case, I also have done ones over the, recently. Remember back when we were going to tariff everybody in the world 100% and volatility was nuts? Well, here was a 4-lot package with volatility of 24 ticks stop. Target, blah. There you go. So that's the risk neutral setup. And it's, I can't overemphasize the pleasure of having that risk neutral scale achieved. The psychological pressure's off and you can think clearly and you can manage your trade, or I can manage my trade and I can do things. That's pretty important, I think. Well, we got about 15 minutes to the MOCs. Whether that amounts to a hill of beans or not, I don't know. My theory is that they're waiting for the earnings. That's just a guess, but pretty close to that weekly expected move today. That's kind of amazing. Blew right past the daily expected move, but right here. These are put in last night, just after the RTH Open. It's based on implied volatility in the option. It is based on options data implied volatility. And it's a well-known, it's not something I cooked up again. It's not, it's just like it's like trading statistics as I talk about through the stream throughout the day. It's nothing I dreamed up. These are all proven strategies and methodologies used by the most successful trading firms and people in history. I'm just trying to take advantage of using them and, making a life for myself and my family. And that's where I'm at this point in my life. I'm not trying to set the world on fire, but, market profile, free distributions. Notice how this distribution fills in almost perfectly this low volume area over here. Isn't that funny how that happened? And if you get market profile and you merge a bunch of these together, it starts to become a pretty much of a balanced profile. It's pretty funny. I mean, you hear a lot of conversation about, they're going to circle back and repair that profile and this and that, and you think, yeah, sure they are. But ironically, a lot of that stuff actually does true. And it's just from those guys saying that, like Jim Dalton or whoever, FT71, or Murad Askar's his name actually, or Dalton or Tom Hogarth or Hogue or any of those people. They're saying it because they witnessed that over the years. They're not spring chickens, any of them, and they know these things to be real, that they actually do that. I'm sure they all have different spins on why, maybe, but who cares? I don't care. Like the 12-to-1 trade. That's it. That is a statistical fact, and it bore itself out and was achieved today. I talked about it at length, but there you are. The IB statistic. Yeah. And on and on. The fact that these levels are have the statistic or the probability that they do over a substantial data set my study looks back at 2,000 days, which is, quite a ways. And of those 2,000 days, it's actually 1,998. And I'm sure somebody will point out I'm lying for 2 days. But anyway, of those days, when we opened higher out of range, price came back and revisited the overnight volume point of control 80.5% of the time. What happened today? Price opened right here, almost on it. Well, one tick above it. No, 2 ticks. 2 points above it, and then revisited it immediately. As example, 64.1% of the time in a higher out of range environment, price revisited the overnight mid. 64.1% of the time. Guess what happened? IB low. Now, the IB low is not taken out. Right? It's set, but it was not revisited. No, that's not the IB low, sorry. And this was the IB high from yesterday, not taken out. The IB low is the statistic, and it was put in here. And that was at 9 o'clock. So it's not a statistic. The IB statistic is not hot until we get to what time? Repeat after me, 9:30. The first 1 hour of the RTH trading session. It's really simple, If I was tricky or good at it, I would try to make it real mysterious and get y'all to send money. You know what I mean? But my goal is to reinforce these things to myself with my narration, because I believe that your subconscious mind believes what you tell it. So I continue to repeat these things out loud for a couple of reasons. The subconscious mind believes what you tell it, number one, and number two, that's the mechanism I have here with this stream to record what I was thinking. I see what I was seeing, and my input, my narration or voiceover gives insight as to what I was thinking at the time, in a trade, whatever. So that's the reason for that. But yeah, that's, I'm sure a lot of it's repetition here on my part, but that's the idea. 14:42, 7 minutes. I was going somewhere with that thought a minute ago, and then I lost it. I think I pointed out the fact that I don't believe you should ever trade your P&L or have money visible. And that's why this was always hidden until it didn't matter over at Static pointed out to me that you can set Bookmap up to show what data points you want and in what configuration. So this is the trade control panel. You can decide which one of these things you want visible and how. You get on one of them and right click and configure. Now you can show the position, all the data points you want, and whether you want the P&L in currency, ticks, or points. And I think in ticks. So there you go. Once I was shown that after all this time, and greatly appreciated, I was able to do two things. I always kept this closed anyway, because I wanted my real estate back and I didn't want to see my P&L. But now I don't have to worry about it because I get the real estate back and I still have the P&L up here in ticks. And I have close or cancel all and close all. Boom. And I am set up to hotkey with my keyboard, of course. And you can do that in both configurations. But you have to have the focus of the computer on this application. If, for example, if I'm pointing out something here to the stream on IRT with my mouse, and I notice over here that a trade is set up and I want to enter it. If I hit the keyboard strokes, nothing's going to happen. I got to be back over here with the mouse and click somewhere over here just to give the computer focus. Obviously, that's not a consideration if you trade with a mouse, because by trading with the mouse, you have broad focus. So I'm converting, I guess I pretty much have converted to trading with the mouse here in the Bookmap. Mainly because the focus thing is a good idea, and for a couple other reasons. I think it's faster, and I think that because typically I'm standing here, these are stand-up desks, so I'm standing here, and I have my hand on the mouse and my arm just, on the table, on the desktop. So if I want to trade suddenly, and I don't do anything suddenly because typically I'm anticipating the trade coming. But if I want to trade, I then have to move both of my hands off the mouse and the desk to the keyboard, make sure I'm located properly, because I use a combination of keystrokes between the number pad and other keys to initiate the hotkey strokes for trading. If I'm trading with a mouse, boop, and it's done. And also, you can be much more precise with the mouse. I can put a resting order right here, clicking with the mouse, and I don't have to think about the size and type it in and how to do that with the keyboard. So there you go. And we're getting close to that MOC, and they're kind of acting like they care. See the liquidity starting to build in here? And what have we got? Well, they've stacked 90s up to 300. Well, it just fell away again. There for a minute. There a minute ago, the 90 was 304s, 90. See the liquidity over here in the book. This is a level 2. You can see that. Yep. Starting to stack. Obviously, the heat map graphically represents resting liquidity in the book. And you can do all kinds of different. I like it this way. I like it simple. I only just put the stop orders and stuff and sweeps and things back on last weekend. And I'm testing to see if I like it. Actually, again, I can't. I see some of these fellows who do a great job trading. Tom B, for example, in the Traders Lab. I mean, I look at some of his chart snaps with all the colors and the bubbles and the this and that going on, and I can't even see where price is. I'm not saying there's anything wrong with that. He trades great. I think he's a great guy. He does a great service to traders, and that's why I recommend every morning I do a blurb about the Traders Lab in my pre-market every day. But I couldn't possibly trade with his configuration Bookmap because it just wouldn't work for me. 2 minutes. Now, I mean, there's a lot of things you can do, but I won't do it because we're heading into the market on close orders here pretty quick, Bubba Louie. Okay. Oh, Bissett, it's so funny. It's a real interesting dynamic, the way these guys are. It seems to me that it's pretty much being run like a reality TV. I won't say anything here for a minute because we're getting ready to have the market on close orders, and then I'll remind me about reality TV, and then I'll try to remember that. It's really interesting, and I'd be curious what y'all think. Slam it into the chat there and let me know what you think about it. And hit the thumbs up, subscribe, notify, send money, all that stuff. But do subscribe and hit the thumbs up, and even, maybe even more importantly, well, no, not really for the algorithm, but I really enjoy the dialogue in the chat back and forth. It's it improves the day. That's for sure. 10 minutes, boys and girls. 14:49:48. 10, I'm sorry, seconds, not minutes, seconds. Now let's see what happens. Days gone past, we'd get big moves. And there's 50. And there's market on close. And it looks kind of like somebody sneezed, and that's about as far as it got, right? Isn't that amazing? Wow. Zero reaction. It looks like a lightning of the liquidity, and that's it. So I think people were stacking, and then they saw nothing was happening and pulled, is what I think. Now, if you were using the real-time pay-for-it market unbalance thing, you could have that. Otherwise, you could do what I did, and here's the market imbalance, which just showed up. 465 million sell side on the S&Ps, plus buy side 64 million for the NASDAQ, sell side 158 million for the Dow 30, and sell side 60 million for the Mag 7. Light stuff. They're all holding their breath for Google and Tesla, in my opinion. Yeah. So there you have it. Now, there are times when we'll have an adjusted MOC order story at 55. This is making a little headway up here towards these highs, but well, they don't have far to go to get to force. I guess maybe they were waiting to see if it was a giant collapse. And since it wasn't, they're figuring it's okay. I don't know. What I was going to say about the management or the way things seem to be going is it seems to me kind of like what they do is they'll run something up the pole and see what the reaction is. Can't even see where that day was over here. Let's see if I can find it on the big scale here. Well, like, for example, here we're going to tariff everybody. And the market takes a dump, and well, okay, we're going to postpone them. And then we come back up a little bit. And then something else happens. Down here we go. And then, okay, we're going to change our way. They actually started calling it here we go. They actually started calling it a taco trade. So they're buying in here up to they've only got 5 more to get to the force. Why, who knows why, but they are. So there's that, okay? And what I was getting ready to say is it seems like they kind of throw it up the pole, and one guy, typically Trump, I guess, takes the downside or the negative side, and then somebody else does something else. Over here. Now, here's Jay Powell's an asshole. He's stupid. He's ignorant. I'm going to fire him. Da-da-da-da-da-da. Yeah, well, we're not going to fire Jay Powell. And, well, I don't think Jay Powell should resign. Then we got this stuff. And then over here, we've got, I have, again, with Bassett. Well, no, Jay Powell I have breakfast with Jay Powell every week. He just put out. And, here's our stuff on tariffs. I really do believe that's kind of what it is. It's kind of like managed by applause sort of a thing. Like if you were in TV, you'd be looking at your ratings. I suspect. Again, it's just me, but that's what I suspect. And what I'm saying, what prompted that was over here, where the Treasury Secretary Bassett. I have breakfast with Fed Chair Powell almost every week. Somewhere down the road here, he said something about he's doing it, shouldn't resign. No, there's no reason for him to resign. And I really do believe that's kind of the way that it's being approached. And I'm not who's to say that's good or bad, but I think what the story is now is that takes place in an environment. They're taking advantage of social media and the super short news cycle. Last week, all you could hear about was this vice FBI chairman guy was going to quit about the Jeffrey Epstein stuff, and the mega people were collapsing over Jeffrey Epstein, and Bannon was saying this, and Trump, or what's his name, Carlson, was saying something else, and they come out with we got a great trade deal. And have you heard anything about any of those? It's misdirection. Have you heard anything about any of that stuff in the last 2 days? I haven't. I think it's just misdirection and taking advantage of the short news cycle and the fact that the base doesn't fact check, has a certain opinion, and uses social media. That's where they get their news, I guess. I don't know. I mean, these are just thoughts. I'm just thinking. I'm not saying I'm Democrat, Republican, or Timbuktu. I'm just saying that I noticed that, and you'll hear in my pre-market when you come by for that in the mornings. That's why the news and the risk level is that I've actually started calling it the random risk, right? What's the random risk factor? Because we don't know. Who the hell knew that Navarro was going to jump out and say, all morning we had Trump's great deal with Japan, and maybe going to be with, Japan was last night. Great deal with the EU's. We're closing in on a deal with the EU. This is Luptix or whatever his name is, the commerce guy. Trade. Navarro, don't take that EU deal with a grain of salt. Boom. He gets his orders filled, I guess, and up it goes. You have no idea that this guy's going to come out and tweet that. Or why? You frankly had no idea. We're closing in on a deal. Well, when I slide up next to a good-looking gal at the bar and sit down on a stool next to her, I'm closing in on the deal. But, we're not home in bed and your boots under the bed. You know what I'm saying? So the deal, you don't have a deal. The deal isn't closed or anything else. We're closing in on a deal. And then this guy turns around, who's also something in the administration. He's not a secretary, but he's a something or another, advisor maybe? Financial advisor? I don't know. Navarro, you know who the guy I mean, I guess. He comes out with a tweet that it's not worth that trade deal. The news about that trade deal isn't worth a grain of salt. Boom. And for some reason they decided they found the salt. I don't know, Who knows? It's crazy. I mean, I think it's a strange, crazy is a good word for it, I guess. Kind of like Curly, Larry, and Moe do government, it's pretty weird. Or a Chinese fire drill or whatever. Who was that? The Keystone Cops, I guess, used to do that. So we didn't get to the 64s. We have new all-time high by a gazillion up here, and the developing value area high and price and the POC is all right up here at the top. So my suspicion would be that when we open the overnight, we're going to maybe pull back a little bit down into this area and then trade on. Because that's kind of what they do. The Asian people wake up and think they get that, they kind of pick up that momentum. And then when London comes around, then all bets are off on that at that point. But you never know. And here we go with this. If you want to see what this looks like on a closer scale, You see how they jam in there and the liquidity starts filling in around it. And I just like this way of, it's much less confusing for me than some of these other heat map deals where you like that or something, you know, and look at all the liquidity coming there on the, as we get into the close. Oh, and there they got them. There they got it. Well, it didn't take them long to get up there, did it? Right at the close, they got that new all-time high at the fours. And I was busy shooting out of my mouth. Sorry about that. So there we go. They got right up there and tagged them out at the fours. Well, I guess it's right on 1500. I was thinking we were over that. There you are. So new all-time high at 6,400 so far. That's just freaking disgusting. The hell did it go? There you go. All-time high. And what? This is how I do it. If you care. 22, baby. Oh, shit, 23. Dude, football. Sorry. There you go. And that's it. All right, have yourself a great night. Get away from the screens. Go do some, work out. Chase mama around the house a couple times or something. It's real important to have a life balance with trading because and believe me, I am, obsessive compulsive and all those kind of things. And I know of what I speak. It's real important to have a balanced life, step away from the screens, think about things, do your homework away from, go take a run or walk. Like I said, chase mama around the bed, do something. And a few hours, come back in and think about your homework. Review your trades for the day, update your journal or whatever it is you do. And above all, I'll be up on ETH tonight because I am sure they're going to have this follow through. I don't know if I'll stream that or not, but very definitely I'll be bright and early in the morning with a recap of the night and the overnight and the numbers and a pre-market analysis, and then we'll take the trade and take the day. Have a great one. Thanks for stopping by. Smash a thumbs up and a like, and when you come by the next time, just say hi in the chat if nothing else. All the best.